Namaste, good morning, friends. Our revision session today focuses on this chapter, okay, which is branch accounts. Next to our single entry chapter, if you look at in terms of coverage area, branch accounts is the largest chapter. Okay, so we are starting with branch accounts as a revision. So basically, on a quick browse through of our theory, we all know that branch is an extension of the entity at a remote location. Branch is an extension of the entity in a remote location. That is, it is located at a remote location but it performs the same operations. We all know that branches are broadly divided into okay dependent, independent and foreign branch. Branches are divided into three: dependent branch, independent branches and foreign branches. So depending upon the nature of branch, we are going to determine the method of accounting also. Okay, so in case of my dear friends, in case of dependent branches, there are three basics of accounting. There are three bases of accounting: debtors method, stock and debtors method, and wholesale price method. Okay, whereas in the case of independent branches, it's just final accounts method. Okay, just our profit and loss account. Okay, final accounts method. With regard to foreign branch also, we practice the final accounts method, but the crucial element is how to transact, how to convert the trial balance, and how to prepare the final P&L and balance sheet, which we will see during the course of the class. And we are now, today's class, or just to start with, we are now focusing on dependent branches. Okay, majority of the times the question comes from dependent branches. Majority of the time in our question papers and in our RTPs, if you look at it, the question might come from dependent branches. Okay, so I have in our material also, we have started with dependent branch. The first one is, okay, what is the method, what that method means, and what are all the accounts to be maintained. What is that method means and what are all the accounts to be maintained is what is our first question. So my dear friends, debtors method. This is a condensed form of maintaining accounts. This is a condensed. It is a small. It cannot be a larger one account where everything is over. This is a condensed form of maintaining account. Okay, branch account is prepared to identify the profit or loss made by the entity or by the branch. Okay, the branch account, it is a singular account which I am preparing to identify the profit or loss made by the entity. It is a singular account I prepare. Okay, as support, Okay, for support purposes, we prepare, okay, branch stock and branch debtors account. If needed, we also prepare the branch stock and the branch debtors account. This is a condensed form of maintaining. It is a simple form of maintaining accounts, okay, where I prepare a singular account called branch account, where I prepare a singular account called branch account to identify the profit or loss made by the branch as a support, okay, to just help me preparing the branch account. I also prepare my branch stock and branch debtors account. So debtors method is the simpler method, is a condensed method of preparing account, is a condensed method of preparing account. Okay, I'm still in debtors method. I'm still in debtors method. I'm still in debtors method only. Okay, okay, yeah. Vijay, can you unmute and tell me what is the one singular aspect that we always say in debtors method in terms of recording of transactions? Yeah, I'm not going into that at all. I'm not taking that answer even. That's not the right answer. Any other who is in the classroom? Anybody? In terms of recording, I have given you a base rule which for life you should remember, debtors method. Not an issue, not an issue. Okay, right? But I'm sure that once if I type that, you will immediately feel, oh, I should have told this. Okay, and right next to you or right behind you will be the wall. You can back yourself. Okay, right? Debtors method, transactions between the branch and head office will only be recorded in the branch account. This is the fundamental principle of debtors account. This is the fundamental principle of debtors account that we have always been saying. Our main branch account will only record transactions that happen between branch and head office. We will never record bad debts. We will never record depreciation. We will not be recording it directly. We will never record discount to debtors. We will never record cash collections. We will in fact not even record sales. Okay, because sales is something which takes place between the branch and the customer. We will only record transactions that arise between branch and head office in the debtors account. So this is the key factor of debtors account. The key factor of debtors method is branch account, followed by some working notes which we will be preparing. Followed by that we will be preparing some working notes. Together it constitutes a bigger one. So my dear friends, when I share you the Excel sheet also, the first sheet will be theory, followed by the formats and solutions, followed by the format and solution as like our single entry. Okay, right? So my dear friends, we are going to check on what is the format of branch account under debtors method. Okay, debtors method. Branch account. Okay, it can be for the period / year ending. Okay, okay. One ground rule which I definitely missed out to tell before the start itself is have your pencils, have your scale, have your pens, and have everything near to you. Okay, including your calculator. The only thing that should be away should be your mobile. Well, unless you are watching it in mobile, I hope mobile is not a comfortable thing, especially for accounts. If you don't have an option, okay, you can watch it in mobile. If you have an option, kindly watch it in your desktop or laptop. Number two, anytime you can unmute me and ask me the doubt. Okay, anytime you can unmute me, just tell your name and start asking the doubt. I will clarify. Okay, number three, suppose you are unable to unmute, you are unable to find the button exactly, etc. Or suppose your voice is not heard by me. Okay, just text me. I'll be able to check it once in half an hour, 40 minutes, so that I will definitely clarify if at all you have a doubt. Okay, but have proper accounting, do it like examination. We are closing the chapter today, and just before the examination you will open it and again read it once. That's all. Okay, the intention of revision is that you should be able to do it, you should be able to become thorough in this chapter, okay, by the end of the day. Okay, okay, right. So debtors a method, okay, branch account, okay, right. If I can remember, if I can make you recollect the rules of debtors method, okay, if I can make you recollect the rules of debtors method, okay, okay, I am very sure you all know, test எல்லாம் பண்ணல எனக்கு வலிக்கும். Okay, so I am very sure you all know, so I am just recollecting. Okay, it will start with the opening balance of assets and liabilities. Debtors method will start with the opening balance of assets and liabilities of the branch, end with the closing balance of assets and liabilities. It will start with the opening balance of assets and liabilities, end with closing balance. Only 4 other transactions will be recorded. Only 4 other transactions will be recorded. Goods sent to branch, goods returned by branch. Cash sent to branch, cash received from branch, cash remitted by branch. Okay, only 4 other transactions will be recorded. Okay, so if I can, okay, this is debtors method, right? So what else will be recorded? Suppose goods are at invoice price. Invoice price means at a price higher than the cost price. The difference is known as loading or unrealized profit or stock reserve. Those are just jargons, the difference. Okay, right? So suppose if there are loading, then wherever goods comes, we will remove the loading on the opposite end. We will remove the loading on the opposite end. So how does this debtors account? It will start with the opening balance of assets and liabilities. Balance brought down, stock, debtors, cash, fixed assets, prepaid expenses, any other asset. Okay, it will start with the opening balance of assets and liabilities and end with the closing balance. Okay, and on the credit side, balance brought down, it will be of liabilities. It will be of liabilities, my dear friends. Creditors, outstanding expenses. Okay, outstanding expenses. Outstanding expenses, any other liability, and then I come to stock reserve. Okay, if opening stock is at invoice price, then you will have the stock reserve in this the other side. You will have the stock reserve the other side, my dear friends. Suppose if opening balance is at invoice price, you will have the stock reserve. So it depends upon, as initially Vijay was saying, it depends upon whether I follow the cost basis. If the head office sends the goods at cost, then the stock reserve concept will not come. If head office sends the goods at invoice price, then the stock reserve concept will come. Then the next entry I will record is goods sent to branch. Okay. Again, if it is at cost, record it at cost price. Okay. Otherwise, if it is at invoice price, okay, goods sent to branch. Okay. Loading on goods sent. Okay, loading on goods sent. Loading on goods sent. The opposite will be goods returned by branch. Goods returned by branch. I am not filling up the amount column as XXX. I know you can do that. Okay, goods returned by branch. Okay, loading on goods returned. Okay, loading on goods returned. Okay, on the debit side, if I write the bank, it means, okay, HO, okay, HO remitting branch for expenses. Okay, if I write on the credit side bank, okay, cash remitted by branch to HO. Okay, cash remitted by branch to HO. Okay, friends. So this is one side. This is so only 4 transactions will be recorded: goods sent, goods returned, cash sent, cash remitted. Okay, and if at all loading is there, I will remove on the other side. Now I come to balance carried down, because it will open with the it will start with the opening balance of assets and liabilities and end with the closing balance so same opening balances whichever was there, okay, will be there as closing balance, will be there as the closing assets will appear. The closing assets will appear on the credit side. The closing assets will appear on the credit side, and the closing liabilities will appear on the debit side. Okay, stock reserve will be recorded if the closing stock is by any way it is at invoice price. If the closing stock is at invoice price, the final answer I get is, okay, net profit, which is nothing but the branch profit to be transferred to HO, which is nothing but the branch profit which needs to be transferred to the HO. Any doubts, please ask me. If you want to show me the any account, please let me know. I will show you. If I have gone fast, please let me know so that I can show you the account fully. Any doubts, you can unmute yourself and ask me. Those who have joined after I started the session, please turn off your video. That is not at all essential. That will save data for you. And also ensure that your audio is on mute. Suppose later you have a question, you can unmute and ask me. I will definitely answer. Otherwise, video on stop mode, audio on mute. Is this clear to you all? Is this clear to you? I hope the silence tantamounts to that you are clear about this, Okay. The next format I am going to prepare is branch stock account. Interestingly, the same format will also hold good with some small minor adjustment. The same stock format will also hold good for your stock and debtors method. The same format will also hold good for your stock and debtors method, my dear friends. Okay, these are considered as working note for debtors method, that is branch account. Okay, branch stock account, branch stock account, branch stock account. Yeah, Sai Lakshmi, if it is, will branch stock account be at cost price or invoice price? Yeah, I that's beautiful answer. I take that answer. She said both. My dear friends, please understand. If goods are sent at cost, it will be at cost price. If goods are sent at cost, it will be at cost price. Otherwise, it will be at IP. If goods are sent by at IP, at invoice price, it will be at invoice price. Otherwise, it will be at cost price only. Branch stock account, okay, where, okay, there itself write a note and keep where goods are sent at IP, stock account will also be in IP. Okay, depends upon, okay, in exam we will not write this, we will just prepare branch stock account, but I am giving you, when we do the questions we will not write this note, but since it is a format I want to be clear to you. Whenever goods are sent, whenever goods are sent at invoice price, branch stock account will be only at invoice price, when goods are sent at cost price, then branch stock account will be at cost price. Okay, right? That is the fundamental principle. Okay, okay. As said, I am not writing that XXX in the amount column. That is understandable by you. That is understandable by you in the format you can write it. Okay, it is an asset account, so balance brought down will be nothing but opening stock. Nothing but opening stock. Goods sent by branch. Sorry. Goods sent to branch. Goods sent to branch. So whatever head office, for branch it is like purchases. Whenever I purchase goods, I debit it because my stock level increases. So whenever I purchase it, I debit it. Okay. Okay, by sales, or it can, you write it as debtors and cash also. Okay, that is not an the nomenclature, depending upon the question it will change, but the thing to remember is, okay, the thing to remember is something like this. If you want, make a note of it later. First listen. Okay, whenever goods are sent at IP, the intention is the branch should sell it at the same price. 100 rupee goods, 100 rupees per unit, I sent to the branch at 120. The intention is branch should sell it at 120. So here also on the debit side it will be 120. Here also on the credit side 120, not an issue. Whenever goods are sent at cost, I send it for 100 rupees, asking the branch to sell it for 120. I send the goods for 100 rupees at cost, asking the branch to sell it at 120 rupees, it cannot be here 100 and here 120. In these cases, we need to make this adjustment. Sales, be it debtors or cash sales or credit sales, okay, where cost is different from sale price, then only cost of goods sold should be recorded. Okay, so please understand, you will record only cost of goods sold. This is popular, this is essential at the time when goods are so sent at cost. Majority of the IP questions, this cost of goods sold will not come directly. You can record the sales, but majority of the cost questions, or majority in all cost questions, in all the questions where the cost is only given, please remember you have to record it as by cost of goods sold, by cost of goods sold, and not just sales, not just sales. I hope the class is following. I hope the class is following, right? So by sales will be where cost is different, then we will be recording it. Then goods returned to HO. Okay, goods sent to branch and goods returned by branch, which is nothing but goods returned to HO. Okay, again, next, normal loss, abnormal loss. Normal loss of goods, abnormal loss of goods. Okay, then my dear friends, suppose if there is a sales return, suppose if there is a sales return. What is sales return? Sales return is where my customer sends back the goods. Where my customer send back the goods, it is known as sales return. Where my customer sends back the goods, we write it as debtors. Okay, nothing but sales return, nothing but sales return. Remember, if cost price is the basis of preparing branch stock, then cost of goods returned should only be recorded. Okay, same principle as sales. If sales, you are recording cost of goods sold, here also cost of goods returned should only be recorded, not the selling price, not the selling price. Cost of goods returned should only be recorded. Okay, I hope I'm clear to you all. Okay, this is how sales, this is how majorly branch stock account will look like. This is how majorly branch stock account. There might be extra entries depending upon the question, but majorly this will be the texture of bank stock account. Balance carried forward. Balance carried forward. It will close with balance carried forward, and anything can be the balancing figure. Fortunately, we did a single entry, so we know balancing figure can be anything. I am not preparing branch debtors account. The word branch is just a substitution. You all know how to prepare debtors account. We have done that in single entry as a format. We have done detailed debtors account there, having all sort of adjustments. So you know what is how to prepare our debtors account. I'm not telling you the format of debtors account that is there in single entry. You can just have a look at it whenever, but debtors account you will not miss it. That's my opinion. some extra things which we are going to understand. Some extra things which we are going to understand. Okay, I go to my branch account. I go to my branch account. Okay, which we prepared. Okay, which we prepared. On the credit side, goods returned by branch is there. Okay, okay. I just put a single star there. I just put a single star, I will write the explanation. Similarly, bank cash remitted by branch to HO is there. Cash remitted by branch to HO is there. I put two stars there. I put two stars there so that I can write the explanation. I can write the explanation. Okay. Okay. For the single star which I have put in my stock account. For the single star I have put in my branch account. Goods returned to HO will be direct return by branch to HO plus returns by branch customers directly to HO. Okay, directly to HO. So goods returned to HO, whenever we say that, it can include two things. Goods returned by the branch to HO. Okay, goods returned to HO. Okay, by branch we can remove. Okay, it's not a problem. You have returned. Okay, by branch okay, goods returned to HO will be by branch to HO plus returns by branch customers directly to HO. That will also be included as goods returned. Sometimes if it is at a selling price and we are working out the question at cost price, we need to convert it into cost price and find the return value. But please return, these returns will also be included. Okay, on a second note, that is for the double star I am writing. Okay, cash remitted to HO will be branch remittance plus direct remittance by customers. Direct remittance by customers. Okay, customer returning goods directly to HO. Customers paying cash directly to HO. By any chance, do we remember what word we used, what phrase we used for this in the classroom? By any chance, do you remember what phrase we used in the classroom? That's beautiful. Route through transactions. These are known as routed through the branch. Even though the customer directly returns to the head office, it means customer has returned to the branch. Branch in turn is returning to HO. Okay. Similarly, cash remitted to HO will be also a cash directly remitted will be a route through transaction. It is routed through head office. So these are all these things we will remember. These things we will remember. Okay. Now I am writing further note. Okay. These two notes and further notes. Okay. So that we are very clear. Normally, cash remitted to HO will be okay. Cash sales plus collection from debtors. Suppose if they give some information like cash has been retained, cash, okay, then it will change. If the question is silent, can normally cash remitted to HO will be cash sales plus collection from debtors. Please remember that. Please remember that. Okay. So this is also which we have seen in many questions. In some questions, very rarely it will come like, I have made some local expenses which I have paid from my collection from debtors. So in that case, I will prepare a quick cash account to find out what is the cash that is remitted to HO. Okay, as a ground rule, we can have cash sales plus collection from debtors, but do not lock your mind. It should be only so. Suppose look into the question if they have given some extra information. Accordingly, we will alter our cash account and prepare and find out what is remitted to HO. A quick look through, please. A quick look through before going into and start doing questions. A quick look through. And if you have any doubt, you can unmute and ask me. Go ahead. Yes, Raja. Yes, Raja. It will be there, Raja. Okay. I hope the class is clear. I hope the class is clear. What I am going to do is work out some questions. Okay, right. Specify the format of branch account under debtors method. We have done that. Stock account. We are okay. Normal loss or normal loss. When we do the debtors account, we will do. Okay. This boxes you are going to fill, these boxes you are going to fill after the chapter is over, so that you are very clear about, when you fill those boxes you are very clear about how to, and then later I will send you the answers also for those boxes. Okay, but I wish you take your time and fill it. I wish you take your time and fill it. Okay, and there in question number 1 of page number 6, suppose you have not downloaded the material, the question will be visible to you now in the screen. From the following particulars of Kanpur branch, prepare the branch accounts in the books of the head office. On the opening balances, stock, debtors, petty cash, furniture, prepaid insurance, outstanding salaries, goods sent to branch, cash sales, credit sales, cash received from debtors, cash paid by debtors directly to HO, discount allowed, cash sent to branch for expenses, rent, salaries, petty cash, insurance paid for the period 1/4/2012 to 31/3/2013, goods returned by branch, goods returned by debtors, stock as on 31/12/2012, petty expenses paid by branch, provide depreciation on furniture at 10%, loss of stock due to fire 4,800. The question itself is prepare branch account in the books of head office. The question by itself is prepare branch account in the books of head office. I saw Sridevi there. The problem is I cannot see who are all the participants, but I think at the time of entering itself, Sridevi was there. Sridevi, are you there? Can you unmute? Oh, it's your email ID. Okay. Okay. So, Lakshmi, then I take it to you directly with you. Is it a cost price question or an invoice price question? It is a cost price question. We are all very clear. It is a cost price question, my dear friends. It is a cost price question. Okay. I continue with you, Sai Lakshmi. With regard to stock account, is the opening stock given in the question? Goods sent, goods returned, and closing stock. So there is no requirement for preparing a stock account. Friends, there is no requirement to prepare a stock account. Okay, there is no requirement. See, if it is a cost price question, they will normally give you the GP rate so that you are able to find out cost of goods sold. If they are not given, that means they don't want you to prepare that account. They don't want you to prepare that account. Whereas we need to prepare our debtors account. Whereas we need to prepare our debtors account. Please remember, we need to prepare our debtors account, and okay, other accounts are not needed. Directly we can prepare our branch account. Directly we can prepare our branch account. Once we prepare our debtors account, we can go ahead and prepare our branch account. Branch account should form part of the main answer. Followed by that should be our debtors account. But for the sake of convenience in the working Excel, I am preparing debtors account first and then going for branch account. You all will leave almost half aside and start preparing your debtors account. Suppose people, students who are very confident that I can do this question, seems to be a simple question, go ahead and complete the question. Meanwhile, I'm also probably I will take a longer time because I'm doing it in Excel. You're doing it in calculator. You can be really faster. And for those who are feeling that I want to have a grip, I want to listen to it once. Let's start with preparing of debtors account. Okay, those of you who are doing it, please don't even concentrate on the screen. You can progress and do it. Those of you who want to have a look at it, let us do together. Those of you who are doing it, just take your earpads out or something, or mute your computer audio and start doing it so that my voice is not disturbing you. Okay, my dear friends, we start with balance brought down. That is the opening balance of debtors, which is given in the question as 14,000. The credit sales given in the question. The question itself gives you what is the credit sales, 1,83,000. The question itself has given you what is the credit sales, 1,83,000. Then if I come, okay, cash paid by debtors directly to HO, by cash directly to HO also will come here, 22,000. 22,000. Okay, discount 1100, discount 1100. Okay, insurance, goods returned by branch, goods returned by debtor, sales return, my dear friends, sales return 7,000, 7,000. Oh, I missed this information. Cash received from debtors 135. Cash received by branch. This is received by branch 1,35,000. 1,35,000. My dear friends, 1,35,000. This leads me to what is the closing balance of debtors. Balance carried forward. Balance carried forward. will be available to me. I am getting a closing balance of debtors of 31,900. I am getting a closing balance of debtors of 31,900. I hope all of us are getting the same thing. I hope you are following. It's a simple debtors account. Now I prepare, okay, in the books of head office, okay. Sales return is there, no? 7,000. Am I wrong? Is there a different answer, friend? In the books of head office, my dear friends, okay, Kanpur branch account, Kanpur branch account, okay, this particulars amount are similar, okay, okay, right. Debtors account will begin from with opening balance of cash assets and liabilities. Balance brought down one by one. Stock 40,000. Stock 40,000. Debtors 14,000. Sorry. Debtors 14,000. Okay. Cash 1,500. Cash 1,500. Furniture 12,000. Furniture 12,000. Okay. Prepaid insurance 1150. And there is an outstanding salaries of 2,100. Okay. Balance brought down. Okay. Outstanding salaries, outstanding salaries 2100, then it will have only four things. It will have only four things: goods sent, goods returned, cash sent, cash remitted. Okay. Goods sent to branch, goods sent to branch, my dear friends, 2,80,000. 2,80,000. Cash sales, credit sales, cash receipt from debtors, cash paid by debtors, discount allowed, expenses. Goods returned by branch 4,000. Goods returned by branch. Okay. Goods returned by branch 4,000. Goods returned by branch 4,000. Okay. Now, now it is about cash. It is about cash. Cash here indicates what is remitted by head office. Cash here indicates what is on the debit side indicates what is remitted by head office. If I can take, it is cash sent to branch for expenses. 12,000 is rent. 12,000 is rent, 5,400 is salaries, 5,400 is salaries, 4,000 is petty cash, 4,000 is petty cash, and 1600 is insurance. Cash sent to branch will be to meet all the expenses. In this case, it is rent plus salaries plus petty expenses plus, petty for petty cash balance, and plus insurance or the cash sent to branch. On the credit side, cash remitted to HO. Remitted to HO will include cash sales plus collection from debtors plus direct remittance of debtors to HO. Cash sales plus collection from debtors plus any direct remittance of debtors to HO. These things will be included. If I look at it, cash sales is 3,30,000. 3,30,000 is my cash sales plus collection from debtors is 1,35,000 plus whatever is directly remitted by HO by the branch customers to HO is 22,000. Okay, I get an answer of 4,87,000. If you have a different answer, let me know. If you don't understand also, let me know. Okay, cash remitted will include three things: cash sales, collection from debtors, and if at all there are any direct remittance, which is there in this question. So it is 4,87,000. 4,87,000, and then that takes me to balance carried forward. That takes me to balance carried forward. On the credit side, it is stock. First, the stock. How much is the stock balance? Okay, 38,000. Okay, debtors. Okay, we have identified the balance. We have identified the debtors balance. 31,900. 31,900. Petty cash. Petty cash. Always petty cash is always petty cash is, if have they given? No. Okay. Opening balance plus amount sent minus amount spent. Repeating, petty cash closing balance is equal to opening balance plus amount sent minus amount spent. Okay. Opening balance in this question is 1,500 plus amount sent for petty expenses is 4,000 minus whatever is the petty expenses in this question is 2,850. Okay, opening plus amount sent, okay, 1,500 plus amount sent minus amount spent will be my closing balance. Okay, furniture, my dear friends, the question says, the information says, provide depreciation on furniture at the rate of 10% per annum. So 12,000 is the value of furniture in the beginning. 1,200 is the depreciation. So the closing balance will be 10,800. So the closing balance will be repeating. 12,000 is there in the beginning. 10% of that 1,200 is the depreciation. So 10,800 will be the closing balance. Okay, I will write for your later reference purpose. Furniture less depreciation. Okay, nothing but, my dear friends, 12,000 minus 12,000 into 10%. Okay, so 10,800, my dear friends. And there is prepaid fire insurance. Is it there at the ending also? Interestingly, yes. If I look at the insurance paid, 1,600 is up to 31/3/2013. Is up to 31/3/2013. Our year ends. We are preparing for the year end at 31/12/2012. So 3 months. 3 months premium is prepaid. 3 months premium is prepaid. Prepaid insurance. Okay, my dear friends, the computation goes like this: 1600 divided by 12 into 3. 1600 divided by 12 into 3. Okay, the 400 is prepaid premium. Is there outstanding salaries in the end? The question is silent. That means the salaries has been paid. The outstanding salaries are also being paid. The question is silent. Okay, so there is no outstanding salaries in the end. We hope to have recorded all the entries in the examination also. Please leave 2 lines on the safer side and do the total, so that if at all you have missed anything later, you can include that without messing up the solution. Raja? Petty cash sent to branch for expenses. Cash sent to branch for expenses. Rent 12,000, salary is 5,400, and petty cash 4,000. One minute, friend. 1 minute. I'll take your doubt. Go ahead with your doubt, friend. I'm listening. Can you be little louder, please? No. Branch account will only record transaction between. Her doubt was, won't goods returned by debtors come here? Goods returned by debtors directly to HO will be taken as a root through transaction, and I will add it up here. Goods returned by debtors to branch will never come in branch account because it is a transaction between branch and debtors. Branch account will only record transaction between HO and F. So it will not come, my dear friend. Automatically, it will be included in this top. I am getting a profit of 205200. If you get a different profit, let me know. I'm not saying I have jumped from sky, I am right. If you get a different profit, let me know. If you have any clarification, ask me. I hope the class is clear. Okay. I hope you are getting the grip of it. Okay. Very easy. Majority of the time branch account is the question. If branch account is the question, please do not miss it. Read the question once or twice and you will be able to understand it without any problem. And our just we are not greedy people, we just aim at 18 accounts. Question number 2. A Mumbai merchant has a branch at Delhi to which he charges out goods at cost plus 25%. One fourth of cost. One fourth of cost becomes one fifth of invoice price or sale price, however you call it. The Delhi branch keeps its own sales ledger and transmits all cash received to the head office every day. All expenses are paid from the head office. The transactions of the branch are opening stock, debtors opening, petty cash, cash sales, goods sent to branch, collection from debtors, goods returned to head office, bad debts, allowances to customers, return inwards, that is sales return, checks sent for rent, wages and salaries, stock, closing debtors, petty cash at the closing 250, including miscellaneous income not remitted rupees 50. Prepare the branch account for the year ending 31/12/2017. Read the question and any of you who want to discuss with me, unmute. Anyone. I'm giving you the voluntary option without calling the name. Yeah. Anyone can unmute to discuss the question. இப்படியே போயிடாது, என்ன பார்த்துதான் ஆகணும். Yeah, what's your name? Manasa, can we discuss? Is it an invoice price question, Manasa? Yeah, it is an invoice price question. And number 2, should I prepare any of the working note? No, not needed, because opening balance of stock, opening balance of debtors, everything given, and closing balance of petty cash is also given, goods and goods returned, everything is part and parcel of the same question. So I need not prepare any of the accounts. Is the class clear? Okay, Manasa? Okay, right? Friends, your time starts now. Your time starts now. Start preparing. Your time starts now. Start preparing. And we are only verifying the answer. We are only verifying the answer, please. We are not looking into the solution, working. Okay, there is an option called, okay, stop presenting. If I press that option, it will go back to our Teams page where you will just find some names, etc. So I'm stop presenting. I'm also going to do the answer as much as you are going to do the answer. After 5 minutes, 6 minutes, we will come back and see the answers alone. So I'm stop presenting, don't worry, but whatever doubt you have, I can listen still. Okay, right? Once you are through, please give me the answers. Once you are through, please give me the answers. I'm getting 19,430, my dear friends. I'm getting 19,430, but you can tell me which is a different number. Maybe I'm wrong. Okay. Opening balance 22,200 and data stock 22,000, debtors 200, petty cash 200, and opening stock reserve is 4,400. Is that correct? Yeah. Goods sent is 40,000. On that, the loading is 8,000. Goods returned is 600. On that, the loading is 120. Cash remitted by HO for expenses is 1,200 plus 400 plus 1,800. Cash remitted to HO is cash sales 5,300 plus collection from debtors 42,000. My closing balance, yeah. No, you need not deduct. That's just miscellaneous income because what is given in the question, if you read the question, collection on ledger account, it does not include miscellaneous income. 5,300 plus 42,000, 47,300. 42,000 is collection and this is cash sales. Both these things does not include miscellaneous income. Collection on ledger accounts means debtors collected. This miscellaneous income, for example, there may be some scrap which are sold, there may be some old items which are sold, that has nothing to do with sales, cash sales or credit sales, it has nothing to do. So collection 47,300, closing balance or stock, debtors and petty cash, leaving you with a stock reserve for stock of 26,000 is 5,200. So I am getting 19,430. Is that 50 rupees difference because majority of you tell 19,380. Is that 50 rupees because you reduced 50 rupees from cash remitted to HO? Yeah. Okay, okay. Please don't reduce it. It is nothing to do with cash sales or collection from debtors. There were answers like 19,510. There were answers like 19,510. What is the problem there? What is the mistake we did? Just to understand. Okay, okay, okay. Right, friends. So this is how this has to be worked. Okay, that is, I am getting 19,430. I understand your logic that you reduced 50 rupees from cash remitted. I understand completely the logic which you are saying, but unfortunately, it is not miscellaneous income is different from our normal income. That is our normal cash sales and collection from debtors. Yes, sir. Yes, sir. Yes, sir. Yes, sir. Don't take it as part of cash sales or collection from debtor, sir. Miscellaneous income is a separate. There were questions in our classroom where furniture sold. We would have taken that here as cash remittance is equal to cash sales plus collection from debtors plus furniture sales plus insurance claim received. Like that we have taken. That is more than sufficient on this. I'm progressing, my dear friends. If you want time, let me know. Otherwise, I believe that all of you have completed. Let's not waste time. Question number 3. The following information and particulars related to New Delhi branch: opening stock, debtors, furniture, petty cash, prepaid insurance in the beginning, salary outstanding in the beginning, goods sent to branch, cash sales, total sales, petty cash expenses, discount allowed to debtors. Okay, on the credit side, cash received from debtors, cash paid by debtors directly to HO, goods returned by branch, goods returned by debtors, cash sent to branch for rent, salaries, petty cash, insurance which is paid up to June. Goods costing 2,500 were damaged in transit and the sum of 2,000 was recovered from the insurance company in full settlement of the claim. Depreciate the furniture by 10%. The branch manager is entitled to a commission of 5% of profit of the branch after charging such commission. Goods are sold to branch at cost plus 100%. Cost plus goods are sold by branch at cost plus 100%. Saumi, are you available there? Saumi, is it an invoice price question or a cost price question, Saumi? It is a cost price question, my dear friend. As she is saying, it is a cost price question only. It is not an invoice price question. All information, okay, are given. Branch, a head office does not send to branch at a higher price, okay, right? So, where at what price goods are sold by branch to customers, Sony? Cost plus 100%. So you have to remember that when you are recording in the stock account, you are supposed to do it in cost of goods sold. Thank you, Somi. So this question involves the preparation of branch stock account. This question involves the preparation of branch stock account, branch debtors account, both. Because similar to first question, this third question, almost all questions are similar only. Branch account, we have done questions in such a manner, everything will be similar. One or two extra information which will make you to prepare which account. Okay, this question is a cost price question. This is not an invoice price question, but the key factor, but the challenge in front of us is preparing the stock account and debtors account properly to arrive at the closing balance. Furniture closing balance is simple. Petty cash closing balance is simple. And prepaid insurance, they have paid it for up to June, 1 year, again 3 months. But salaries outstanding in the beginning is given. There might be closing outstanding. We will come to that later. We will come to that later. First, for the class, let us start with the preparation of stock account. Now I come to the crucial point of computing cost of goods sold. Okay, cost of goods sold. The question says, okay, the question says, okay, goods sent to branch, total sales 3,50,000. Total sales, my dear friends, 3,50,000. Let's not worry about cash sales, credit sales separately. Okay, that credit sales we will find it is important only for our debtors account, and cash sales for our amount remitted to head office. So coming back, okay, goods, okay, total sales 3,50,000, branch sales cost plus 100%. If 100 rupees is the cost, sale price is 200 rupees. 100 plus 100% of 100, so 100 plus 100, 200 rupees. So 1 by 1 on cost becomes 1 by 2 on sales, becomes 1 by 2 on sales. I hope the class is understanding. 1 by 1 on cost becomes 1 by 2 on sales. So cost of goods sold, okay, 3,50,000 is the selling price, into 1 by 2 will give me my cost price, will give me my cost price. 3,50,000 into 1 by 2, okay, 1,75,000, 1,75,000. Next comes goods returned by debtors 2,000. Okay, cost of goods returned, okay, or sales returns, you can put as sales returns also. Okay, nothing but cost of sales returns. Okay, again 2,000 into 1 by 2. Okay, okay, it is 100% on cost. Now I have to find out the cost, so I have to remove the profit. Profit is also 100%. So if I remove half, which means I have removed the profit and recorded the cost. I have removed the profit and recorded the cost, my dear friends. Goods costing 2,500 were damaged in transit. Abnormal loss 2,500. Abnormal loss 2,500. No other information with regard to stock. All information given are captured by us. All information given are captured by us. Let us go for our closing stock computation. Let us go. The closing stock is 46,500. The closing stock is, I am getting 46,500. I hope the class is also getting the same thing. I hope the class is also getting the same thing. Any doubt, please unmute and ask me. Don't hesitate. I am preparing branch debtors account. I am preparing, next I am preparing branch debtors account. Again, opening balance 10,000, which will come on the debit side. Balance brought down, okay, 10,000. Balance brought down 10,000. Opening debtors, okay. Then prepaid insurance salary in the beginning. goods sent to bank, cash sales 270, credit sales, so credit sales is 80,000. Total sales minus cash sales will give me credit sales. Okay, credit sales, okay, is nothing but total sales of 350 minus cash sales of 2,70,000, 80,000. Okay, discount allowed to debtors 500. By discount 500. Okay, and then cash received from debtors 65,000. Cash 65,000. Cash received from debtors 65,000. Okay, cash paid by debtors directly to HO. Again, cash to HO. Okay, another 5,000. Another 5,000. Goods returned by branch, that is goods returned by return, sales return. Okay, they have a 2,000 worth of sales return. Okay, and then there is, I think we have recorded everything in debtors account. We have recorded everything in debtors account. Okay, I am getting 17,500. I am getting 17,17500. I am getting 17,500. I hope the class is also getting the same thing. I hope the class is also getting the same thing. Okay. Okay. Shall we prepare the branch account? Shall we prepare the branch account? Okay. So directly, now that the working notes are over, we can directly go and prepare the branch account. In the books of the head office, the Delhi branch account, okay, branch account will begin from the opening balances of assets and liabilities. I wish if you're through, just switch it off and start doing it. Just put your computer on mute, okay, and start doing it. It's fine with me. For my purposes, cash sales 2,70,000 plus collection from debtors plus collection from debtors 65,000 plus direct remittance by debtors 5,000 plus insurance claim. Whatever I receive, I have to give it back to the head office. Okay, 2,000. So together it constitute 3,42,000. Okay, cash remitted to debtor, cash remitted to head office means whatever I collected, cash sales plus collection from debtors, direct remittance by customers, and insurance claim received. Okay, I go for the closing balances. Petty cash closing balance will be opening balance of petty cash 1,000 plus petty cash sent 2,000 minus amount spent for petty expenses 2,200. So repeating, opening balance 1,000 plus amount sent is 2,000 minus amount spent 2,200 minus amount spent 2,200. Prepaid insurance at the close will be 1,200 divided by 12 into 3. Up to June 2017 you have paid. We are preparing for the year ended 31st March 2017. We are preparing for the year ended 31st March 2017. So April, May, June stands prepaid. So 1,200 divided by 12 into 3 will be regarded as prepaid expenses, will be treated as prepaid expenses. Now, okay. Is there an outstanding salary at the closing? Can anybody confirm me? Is there out? Yeah. How do you find out, friend? Yeah. Yes. So that is the answer as she was saying. There is an opening outstanding salary of 4,000. Current year 12 months plus the opening outstanding I should have paid, but I have only paid for 12 months because salaries is 4,000 per month. So I know that I have paid only for 12 months. So the closing is also an outstanding of 4,000. The closing is also probably March month salary. They are always paying it in April. So they had outstanding in the beginning. If I had paid, I should have paid last year 1 month plus current year 12 months, but I have only paid for 12 months. So current year March should also be outstanding, which is again 4,000, which is again 4,000. Then comes the concept of outstanding managerial commission. I will compute the commission and show it as a liability. Because it is a transaction between branch and the manager, it should not come except because it is a liability. Except because it is a liability. Okay. Working note for manager commission. Okay. Profit before commission. Okay. My dear friends, profit before commission will be profit before commission 1,11,400. Okay, the question says the manager is entitled to 5% commission of profit of branch after charging such commission. Okay, okay, profit into 5 by 105. So it is after charging such commission. Okay, profit into 5 by 105. I am getting a commission of 5305. I am getting a commission of 5305, my dear friends. Any doubt? Ask me. Any doubts, friends? I hope the class is understanding. So one important thing we learned in this question is any other expense income also. In the last question, they have retained it, they have not remitted. But in this question, if the question is silent, the any other income also will be remitted to head office. So I go to the format where we write where we put two hashtags and write plus any other receipts. This can be, my dear friend, sale of asset. This can be insurance claim. It can be anything. But any other receipt will also be remitted back to the head office. Any other receipt will also be remitted back to the head office. I hope the class is understanding. Just a minute. Okay, shall we, friends? Shall we? Okay, shall we? I am going to the November 2019 question, which is there in our RTP. The following particulars are relating to Pune branch for the year ending December 2018. Prepare branch account in the books of the head office. Okay, opening stock, debtors, closing debtors, okay, and petty cash furniture opening balance, prepaid fire insurance, salary outstanding, goods sent to branch, cash sales, credit sales, cash received from debtors, cash paid by branch debtors directly to HO, discount allowed, cash sent for rent, petty expenses, etc., annual fire insurance, goods returned by branch, goods returned, stock closing debtors, and petty cash spent by branch provide depreciation. Goods costing 12,000 were destroyed by due to fire, and a sum of 1,000 was received from the insurance company. Okay, this is our recent November 19 RTP question. Okay, a similar question to what we just worked out. A very typical question to what we worked out now. Almost all informations, including the insurance information, is the same. Only benefit I get is I need not prepare my stock account, I believe. I need not, because opening stock is given, goods sent to branch is given. Okay, cash sales, credit sales, cash received, anyhow they have not given the cost of goods sold information, so I need not prepare my stock account, but I need to prepare my debtors. Opening debtors is given, closing debtors is given, and cash received from debtors is also given. Cash received from debtors is also given. So I need not even prepare my debtors account. I can directly go ahead and prepare my branch account. I can directly go ahead and prepare my branch account. Your time starts now. Your time starts now. I'm stopping the presentation only to give you the time to do it. I'm stopping the presentation, my dear friends. I'm here. Any doubt you can ask me. Friends, I'm taking you directly to the answer which is there in the suggested, in the RTP itself. I'm taking you directly to the answer which is there in the RTP. Okay. This is the RTP answer, 78,950. I hope it is visible in your screen. So kindly look into some other gave me a different answer. Let me know. So opening balance of assets, salary outstanding, goods sent, goods returned, okay, expenses sent and expenses remitted, where you will also find receipt from insurance company, where you will also find receipt from insurance company, okay, and the closing balance of assets with prepaid insurance having the same thing, okay, and the net profit, and the net profit as 78,950. Net profit as 78,950. Why do you assume so? Have they given in the question? Yeah, don't assume so. I agree. I understand your point that is there a closing outstanding of salaries, but unless some information is stated, let us not assume. 78,950 is the net profit, my dear friends. 78,950 is the net profit. Okay, right? Okay, so that is the, yeah, go ahead. அது எப்படி வந்தது அப்படின்னு கேக்குறியா? For closing, what is the opening balance of petty cash? 500, correcta? Raja, are you able to listen to me? Okay, add amount sent. for petty expenses 1000, right? And minus amount spent. Opening plus amount sent minus amount spent. Okay, friends. Okay. Right. Okay. I know that you are sitting for a long time. You can take a small stretch out break. Uh, Friends, we start back. We start back with the next method, my dear friends. We start back with the next method, that is stock and debtors method. That is stock and debtors method. Okay. This is a detailed form of maintaining accounts. Okay. In this stock and debtors method is a slightly detailed, slightly elaborate form of maintaining the accounts. Stock and debtors method is an elaborate, detailed form of maintaining accounts. Okay. Okay. What are all the accounts prepared in stock and debtors? Okay, it is stock account, which will always be at IP, which will always be at IP. Okay, debtors account, debtors account. Okay, debtors account will be prepared. Okay, I know sometimes cash account will be prepared. Okay, abnormal loss account will be prepared in many cases. Okay, cash account will be prepared, and one other key account is one other key account of stock and debtors method is, that's beautiful, yeah, adjustment account. Okay, where loading slash stock reserves are removed. Okay, where loading and stock reserves are removed, then we will prepare the P&L account. Then we will prepare the profit and loss account. Then we will prepare the profit and loss account. This is the format. Okay, these are all major. I'm not saying this is only. Sometimes cash account might become necessary, but majority of the time it is these accounts which will take you to stock and debtors method. The key account here is this adjustment account, where all the loadings will be removed and the net result of adjustment account will be the gross profit made. The net result of the adjustment account will be the gross profit made by the organization. So when I go to the format now, I'm in stock and debtors method. I am preparing branch adjustment account. Okay, I am preparing the branch adjustment account. Okay, it is a reflection of wherever my loading will come, it will be appearing here. For example, opening stock will appear in the debit side of my stock account. Opening stock will appear in the debit side of my stock account, and the raw stock reserve on that, loading on that, whatever name you call it, unrealized profit. In department we call it as markup. These are just jargons. Okay, so whatever is the stock reserve on the opening stock will come in the adjustment account as the opening in the credit balance. Opening stock, debit side of stock account. Normally Opening stock reserve, we will put in branch account at the credit side, but here it is adjustment account. So by balance brought down, nothing but stock reserve on opening stock. Okay, nothing but stock reserve on opening stock. XXX, you all fill it up in the amount column. I'm not doing that. Okay, so it starts with the credit side balance brought down opening stock reserve. Then goods sent to branch. On that I have to remove the loading. Okay, goods sent to branch, nothing but loading on goods sent. Okay, go loading on goods sent. So obviously goods returned, okay, by branch, nothing but loading on goods returned. Loading on goods returned will appear. Okay, then comes the two things which we have to remember, I'm writing it as a theory also, so that we are very clear, in this. Okay, in case of normal loss, the same will be credited to stock account. Anyhow, at invoice price, always stock account at invoice price, and debited to branch adjustment account. Okay, and the same will be credited to stock account and debited to branch adjustment account in total. Okay, it is directly credited to stock account and debited to branch adjustment account. In case of abnormal loss, this alone please remember, in case of abnormal loss, okay, credited to stock account, okay, at IP, loading removed in branch adjustment. By debiting it in the branch adjustment, I will remove the loading and the balance is transferred to branch, abnormal loss account. So normal loss only directly from stock to branch adjustment in total value. Abnormal loss in branch stock account, again like normal loss, I will credit it, but I will not fully debit it in branch adjustment account. I will not at all debit it in only the loading part of branch adjustment. Only the loading part of branch adjustment. Only the loading part of abnormal loss will be coming to branch adjustment on the debit side, and then the balance, that is the cost value, will be taken to abnormal loss account. In the format, I will prepare the abnormal loss account also to you to make it more clear. Okay, my dear friends, coming back. Okay, so here, okay, branch stock, nothing but normal loss. Directly it will come. Okay, abnormal loss. This is nothing but loading on abnormal stock. Only the loading will be taken out. Only the loading will be taken out. Okay, so these are all the transactions which will have the impact of loading. Okay, opening stock, goods sent, goods returned, normal loss, abnormal loss, and then I will end this account with okay, balance carried forward, nothing but stock reserve on closing stock. Okay, this will lead me to something known as gross profit in this account. This will lead me to something known as gross profit. The result of this account will be gross profit. The result of this account will be gross profit. Okay, our taking our GP, we know how to prepare P&L. P&L, the word branch is a prefix. If you remove that prefix, it's a normal P&L, debit all expenses, credit all incomes. Okay, it's a normal P&L taking GP as the basis that we don't need. Okay, for the class and for keeping the format, I'm just preparing the abnormal loss account format, abnormal stock, that is abnormal loss account format, so that you are very clear. You can call it as abnormal loss account or the abnormal stock account, both are acceptable. Okay, branch stock at invoice price. From branch, always stock will be at invoice price. Then branch adjustment, nothing but loading on abnormal stock. Okay, so that is what is going here. This is what is going here. To be more specific, this amount is what is going here. Okay, this branch adjustment, whatever loading you are saying, is what is going on the debit side of branch adjustment as abnormal loss. Okay, then comes branch sorry, cash, which can be sale of abnormal stock. If at all there is any scrap value, sale of abnormal stock. Otherwise, cash. Okay. Insurance claim received. Insurance claim received. Okay, whatever is the insurance claim received for abnormal stock, and the balance will go to branch P&L, and the balance will go to branch P&L as an abnormal loss. Once more, Ramji. Um, Amam. Yeah, that refers to the stock loss. That refers to the stock loss. If we go to the skeleton of the stock account, abnormal loss, this is what will come there as stock loss. இப்போ ஒரு questionல we saw that 2,500 lost, insurance claim received 2,000, so there will be a 500 loss, something like that. So friends, I am moving on. Friends, I am moving on to the questions. I am moving on to the questions on stock and debtors method. Okay. Mr. X, a cloth trader of Kolkata, opened a branch at Kanpur. The goods were sent by head office to the branch, the invoice at selling price to the branch, which is 25% of the cost price. Okay, so 1/4 on cost, 1/5 on invoice price. The following are the particulars relating to the transaction. Goods sent to the branch at cost, sales, cash credit, collection from debtors, returns from debtors, discount allowed, cash sent to branch for freight, for salaries, for other expenses, spoiled cloth written off at invoice price, normal loss estimated at 15,000. Prepare branch account, branch debtors account, branch adjustment account showing the, and also the branch P&L, because they want the net profit and also the branch P&L. So these are all the accounts to be prepared. Look through the question once. Question number 5 in page number 9. This is where I start. This is where I start, my dear friends. Question number 5 in page number 9. Okay. First, branch stock account. Okay, branch stock account. Okay, balance brought down, that is the opening stock. Okay, open the branch, sorry, open the branch. So which means opening stock is not there. I should have read it once more. Okay, open the branch, which means opening balances are not there, which makes us more easier the question. Okay, so goods sent to branch 4,50,000 is a cost. We need to add 25% to that. 4,50,000 is a cost. We need to add 25,000 to that. Goods sent to branch. Okay, it is 4,50,000 plus 4,50,000 into 25%. Okay, 562 500. I am getting 562 500. Sales, cash and credit put together. Okay, sales. Okay, I can put cash and credit together. 210 plus 320, 2,10,000 plus 3,20,000. Okay, 5,30,000. Cash collected from debtors, return from debtors 10,000. Okay, sales return, my dear friends, 10,000. Sales return 10,000. Discount allowed, cash sent for freight, salaries, other expenses. Abnormal loss, normal loss. Okay, abnormal loss. Abnormal loss is 10,000. Normal loss is 15,000. 15,000. And I don't think any goods returned to HO is there in the question. Okay, so that makes the question all the more simpler. Okay. Yeah, go ahead with your question. Yeah, yeah, I will prepare it in the you are asking me whether I should write it as branch. Okay, abnormal loss, I'll write it as branch. Okay, I accept with you. We write it as branch adjustment account. Yeah, I take your nothing but normal loss. Abnormal loss, let it be abnormal loss account, but normal loss, as you said, it is branch adjustment. I take your answer. Balance carried forward, nothing but closing stock. 17,500. Okay, I hope you are all getting the same. I'm preparing the branch debtors account. I'm preparing the branch debtors account. There's no opening balance, obviously, it's the first year. Okay, credit sales 3,20,000. Credit sales 3,20,000. Credit sales 3,20,000. Cash collected from debtors 2,85,000. Okay, cash collected from debtors 2,85,000. Cash collected from debtors 285. Returns from debtors, sales return is 10,000. Returns from debtor 10,000. Discount 8,500. Discount is 8,500. 8,500. Freight, salaries, other expenses, normal, abnormal. So that takes me to the total. 16,500 is the balance of debtors account. 16,500 is the balance I get in my debtors account. Now for the class purposes, I will prepare abnormal loss account also. Though they are not asked for, you need not prepare in the examination. But for class purposes, I will prepare abnormal loss account so that you are clear how it works. Okay, it is branch stock. Okay, we know from branch stock we have to pick that abnormal loss of 10,000 from branch stock. Okay, branch adjustment. Okay, branch adjustment is the loading is 1/5 of invoice price. Always from stock it will come in invoice price. 1/4 of cost, so 1/5 is the invoice price 2,000. Branch adjustment 2,000, nothing but 1/5. My dear friends, 1/5 is the answer. Branch adjustment. There is no insurance claims, nothing. There is no insurance claims, nothing. Then remaining is branch P&L. Okay, remaining is branch P&L. Okay, that is 8,000. This is how this account will appear. They are not asked for. I'm just preparing and showing so that you are clear about how this account will appear. If there is insurance, my profit or loss would have changed. Now I am going to this crucial account called branch adjustment account. Now I am going to this account, branch adjustment account. Okay, wherever loading is involved, I'm going to take it. Okay, there is no opening stock, goods sent to branch. Okay, from my stock account, whatever I have put in my stock account divided by 5, 562 500 divided by 5, 1/4, nothing but 112,500. We can even check it. 450 plus 112,500 is what is 562,500. So 1 by 5 of that. Okay. Okay. Is there goods returned? Is there goods returned? No, I think so. I don't think so. There is goods are returned to HR. Okay. Branch stock, nothing but normal loss. Nothing but normal loss, which comes to 15,000. Okay, abnormal loss account. Okay, which we all know is 2,000. Which we all know is 2,000. Okay, 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 balance carried forward, nothing but loading on closing stock. You can call it also a stock reserve. Okay, you go to the closing stock. We go to the closing stock, 17,500 divided by 5. This is my loading on closing stock. The answer I get is known as gross profit. Subsequently, as it is, I prepare my P&L. Gross profit, okay, 92,000. Gross profit 92,000. Gross profit is 92,000. The question says, okay, from the top, if I look at the expenditure, okay, discount 8,500. Discount 8,500. Discount 8,500. Freight 30,000. Freight 30,000. Freight 30,000. Salaries 8,000. Salaries 8,000. Okay. Other expenses 12,000. Other expenses 12,000. And abnormal loss, okay, abnormal loss will be that 8,000, I believe. Abnormal loss will be that 8,000. Okay, leaving you with a net profit. Leaving you with a net profit. Any doubt, please ask me. I hope it is clear. Okay, after the sessions are over, my dear friends, after the sessions are over, okay, whenever you want, okay, you can rework this entire question under data's method in the afternoon. Okay, after the sessions are over, the same question, if you work out under data's method, just check one or two questions so that you are getting the grip on data's method and stock and data's method more clearly, more with the vigor that I am able to do. Just a confidence measure, my dear friends. I am progressing. Question number 6. Multi-Chain Stores Limited Delhi has its branch at Lucknow and Chennai. It charges goods to its branch at cost plus 25%. Following information is available of the transaction of the Lucknow branch for the year ended. Opening balance, stock, debtors, petty cash. Transactions during the year, goods sent to Lucknow branch, goods returned to HO, cash sales, credit sales, goods pilfered, goods lost by fire, both are abnormal loss. Insurance company paid to head office for the loss of fire. Cash sent for petty expenses. Bad debts by branch. Goods transferred to Chennai branch under HO advice. Okay, I will check the line error. 1 minute, I will check the line error. Okay, it should be 15,000. Goods transferred to Chennai branch under HO advice should be 15,000. Insurance charges paid by HO 500. Goods returned by debtors 500. Petty cash 230. Debtors 14,000. Okay, I am repeating, my dear friends. Goods sent to Lucknow branch 325, goods sent to HO, returned to HO 10, cash sales, credit sales, goods pilfered, goods lost by fire, insurance company pay, cash sent to for petty expenses, bad debts. Up to this, no line error. Goods transferred to Chennai branch under HO advice 15,000, insurance charges paid by HO 500, goods returned by debtors 500, balances, closing balance, petty cash, debtors. Okay, goods worth 15,000 sent by Lucknow branch to Chennai branch was in transit. Show the following accounts in the books of the multi-channel. Let's know branch stock account, debtors account, adjustment account, P&L, and stock reserve account. Please read through the question. Yeah, I will take your question, friend. Can you make it little louder? Yeah, sorry. Anjani, you are there, Anjani? Can you, if you are there, can you unmute yourself? Yeah. Anjani, goods transferred to Chennai branch under head office advice. What should I do with that? Yeah. Goods transferred to Chennai branch under HO advice 15,000. What should I do with that? You are unable to hear me out, Anjani? Okay, no problem. You can mute. You can mute yourself. You can mute yourself. Okay, I'm sorry. I don't know how many of you are there. I cannot see the participant. So I go back to the same persons again for the question. Vijay, can you answer me? Goods transferred to Chennai branch under HO advice. என்ன பண்ணணும் Vijay? That's beautiful. It should be treated as goods returned to HO. It should be treated as goods returned to HO. Never worry about that statement. Goods worth are still in transit. That is not our worry at all. It should be treated as goods returned to HO. It should be treated, that's the dot and answer for that. Okay, it should be treated as goods returned to HO. Okay, so stock account, Lucknow branch account, Lucknow branch adjustment account, P&L account, and stock reserve account. Preparing abnormal loss or not is absolutely, I leave it to you all. Okay, if you want, you can prepare abnormal loss, or you can directly, you know how to what goes to the adjustment account and what comes to the P&L account. Okay. Friends, I don't want you to look into the presentation at all, though I'm going to do not by stopping the presentation for those who are not able to. For those who are unable to do the question, take out put the computer on mute, start working. Let us check the answer alone. For those who are doing along with me without muting and other things, please stop me wherever you have a doubt. Let us prepare the stock account first. Okay. For those who are doing along with me, please stop me wherever you have a doubt. goods returned to head office, I will add, okay, return to HO and transfer to another branch. Both are returns for me. As far as I'm concerned, goods are gone out of me. I cannot sell it. 10,000 plus 15,000, 25,000. Sales is 1 lakh plus 175, 2 lakh 75,000. Okay, 2,75,000. Both cash and credit sales put together 2,75,000. Abnormal loss is both 7,000. Abnormal loss is both the 2,000 plus 5,000. Both are abnormal loss. Unless the word normal loss appears, never record it as normal loss. It is only abnormal loss. Okay, cash sent for petty expenses, bad debts, goods transferred, we are entered, goods returned by debtors, goods returned by debtors, sales return is nothing but, sales return is nothing but 500, 500, okay, petty cash, closing debtors, goods worth, okay. So we have, as far as possible, recorded all the stock account things. We have recorded all the stock accounts things. Yeah, I take your answer. I take your question. Yeah, I have added 10 plus 15. That's what is my 25,000. So I'm getting 48,500. I'm getting 48,500 in the branch stock account as closing stock. I'm getting 48,500 in the branch stock account as closing stock. If you are having a different answer, please correct me too. Okay. Branch debtors account. Branch debtors account, my dear friends. Opening balance is 10,000. Opening balance 10,000. Okay, right. Um, credit sales is 1,75,000. Credit sales 1,75,000. Credit sales 1,75,000. Goods pilfered, goods lost, insurance, cash sent for the day, bad debts at branch 500. Okay, bad debts 500, bad debts 500, goods returned, insurance are goods returned by debtors. Okay, sales return is again 500. Okay, and the closing balance of debtors, balance carried forward is is 14,000. So the missing element is cash collected from debtors. The missing element is cash collected from debtors. So that is branch debtors account. Okay. Okay. The question has asked for debtors, branch adjustment, branch P&L, but I will also prepare abnormal loss account. I will also prepare abnormal loss account. Okay. Abnormal loss account. You can go without preparing this branch stock. Okay, we know what is the abnormal loss in the branch stock, 7,000. Okay, the loading of that branch adjustment, the loading of that 1/4 on cost, so 1/5 on sales. Okay, 1,400 loading on that. Okay, and insurance claim received, even it is by the head office. Okay, the insurance claim, insurance paid by the head office. So instead of cash, it is HO, paid to HO. That's why I'm putting it. If I have received it, I'll put cash. Instead, I put HO 3,000 and branch P&L. Okay, okay. Since it is revision, I'm saving time. I'm not doing the total of this account. Okay. Okay, friends, very rarely, actually no need, but if they ask for you for stock reserve account, if they ask you in this question, they have asked you, so I will prepare and show, actually not needed, but rarely they ask such things. Stock reserve account, nothing but by balance brought down. Okay, stock reserve on opening stock. Okay, stock reserve on opening stock, go to the stock account. Okay, in the stock account, this is 1/5 of this. Okay, that is 6,000. Okay, then balance carry forward. Okay, stock reserve on closing stock. Okay, again go to the account, go to the stock account. Okay, divided by 5. Okay, now the difference is branch, the difference is branch adjustment account. Okay, branch adjustment account. Okay, nothing but, okay. Anyhow, we are going to put these things in branch adjustment account. If I have not prepared the stock account, stock reserve account, I don't know. Sometimes they ask this, so I just want to clarify it to you. Generally, they need not ask this. Every adjustment can be made there itself. Okay. So now I prepare my adjustment account. Now I prepare my adjustment account. Now I that is my Excel sheet. One minute. I will again. I will again. Now our team screen is visible, right? Now our team. Yeah. Now I go back to my Excel sheet. Is the Excel sheet visible for all of us? It is so that my Excel sheet is not visible. Uh, uh, yeah. I think receivers and network error will be there. Receivers and a network error will be there. Just F5 you will be able to see. Yeah, just F5 you will be able to see. And for all the receivers, please don't look into this video of mine, which will have a time lag, which will definitely have a time lag. We are okay. Actually, from 9 o'clock onwards, the problem will be more severe because all offices will start working. So never be worried about this video getting struck. That is not at all an issue. Two things are, that's why I always ask you only two things. Is the voice reaching and is the Excel visible, is the screen visible? Don't worry about video getting struck. Okay, for some time you might not be looking at the smart face, that's okay. Okay, right? So please look into this Excel sheet. Ramji, இன்னும் உனக்கு ஸ்ட்ரக் ஆயிருக்கா ராம்ஜி? Okay. If at all you have a problem, please F5. And if at all there is a lag, that is only due to network. You and me cannot solve that, but stick on to that, stick on to that. Okay, right. Coming back. Huh? No Fi in phone. Yeah. Okay. No Fi in phone. Okay. So in phone you have to just go out and come back. Okay. Because the phone heat ஆகுது ஒரு 3 hours அந்த மாதிரினா the phone also gets heat. Okay. Obviously all electronic devices will have its own problem. We are trying to use the best use of technology. Okay, I'll tell you the story later, that how we got into Teams, and it's a big story. We had some other app, and that app had a problem. I hope you know that the first few classes of law was happening. That is, I honestly tell you, I had planned only to take the revisions as recording and putting it. Credit goes to Sai Lakshmi. She only said that if you can also do revision online, like how Charanya does, it will be fine. So if at all this is useful, the credit goes to her. If at all you want to see, because yesterday as soon as I put, and when the evening I saw there were 40 people asking, we will come to the class, we will watch the live class. When I go and see the number of participants, it is 14, and I don't know why it is less. And I don't know why it is less. If they never had the intention, they could have not now add up, but no worries. Coming back. Okay, right? So for opening stock, closing stock, I need not do. I can directly take stock reserve. I can directly, because for opening and closing stock, I have already done. I can directly take from stock reserve. Goods sent to branch. Goods sent to branch. Okay. Goods sent to branch, my dear friends, whatever is the goods sent divided by 5. Whatever is the goods sent divided by 5. Okay. So 1/5 of it. Okay. There is no goods returned. As such, there is no goods returned also. And then there is no normal loss. Then comes abnormal loss. Then comes abnormal loss. Okay. Abnormal loss. We already have it in the account ready. Okay. 1400. Okay, and closing stock we have already done in the stock reserve account. Closing stock we have done in the stock reserve account. This takes me directly to gross profit. This takes me directly to gross profit. Once again, goods returned or there, sorry. 25, sorry. Yeah, I stand corrected. Thanks. Okay. Goods returned to HO, okay, on the 25,000. 54,900. 54,900. So I'm directly preparing as it is my P&L account. Okay, taking the gross profit as the basis 54,900 and checking for the expenses, goods sales, cash sales, credit sales, goods pilfered, goods lost, insurance, cash sent for petty expenses, bad debts 500, bad debts 500, insurance 500. Somebody is unmuting. If you have a doubt, ask me, I will answer it. Insurance 500. Petty expenses. Petty expenses is like this, my dear friends. Opening petty cash plus send minus closing petty cash. Okay, opening petty cash plus send minus closing petty cash. Opening petty cash is 50 plus amount sent is 34,000 minus closing petty cash balance is 230. So petty expenses comes to 33,820 and abnormal loss, my dear friends, abnormal loss in my abnormal loss account in branch 3 is 2,600. Friends, somebody's is on mute, is on unmute. Can you please mute yourself because it will disturb the others also. Okay, please mute yourself. I'm taking your question. Please go ahead with your question. I'm listening. Yeah, go ahead. Hold on, Raja. What's your doubt? Closing stock is 48,500. Correct, Raja? Here is the account. No problem. I'm getting a net profit of 17480. I'm getting a net profit of 17480. Please confirm me if you have a different answer also. Please let me know. Okay, 17,480. We will do one more question, complete stock and debtors, and then take the break, please. Okay. Okay, stock and debtors. One more question, maybe. Okay, then we will do this wholesale price method and come to the then take the break. We'll do the seventh question also, please. We'll do the seventh question also. Okay, it's like from now on it's like preparation of whatever account you are asked for. I'm very sure you can prepare those accounts. My request to you is two things. One, for both the problems we did under stock and debtors method, please do the debtors method and see after the revisions are over so that you get the same answer. Okay, if you want me to do more question on stock and debtors during the break, you let me know. Okay, we'll wait. Wholesale price method. Okay, question number 7. Rukmani Stores, Delhi, invoiced goods to its Jaipur branch 20% less than the catalog price, which is cost plus 50%, with instruction that cash sales were to be made at invoice price and credit sales at catalog price and allow a discount on prompt payment. The following details relate to the branch are provided by the stores. Invoice the stock on opening and on closing. Branch debtors on opening. Invoice stock means invoice price. That's what they mean. Okay. Branch debtors, branch furniture, cash sales, credit sales, goods invoiced, goods sent to branch, goods returned by branch, expenses paid, rent, salaries, petty expenses paid by branch, cash received from branch debtors, remittances by branch to HO, discount allowed to branch debtors, branch bad debts, and goods returned by debtors. It was decided to make a provision for discount of 42,500 on closing debtors for prompt payment. Depreciate the furniture at 10%. You are required to prepare Jaipur branch account and goods sent to branch account in the books of Rukmani Stores. Jaipur branch account. So which method is that? Which method is that? Can somebody unmute and tell me which method? If they say prepare branch account, debtors method. Whenever they say prepare branch account, it is debtors method. Goods sent to branch account. Okay. Okay. As an additional feature, we can even see the P&L, trading P&L of this account. Whenever there is a wholesale price method, normally they also ask the trading P&L also. They ask the trading P&L also. Okay. First read the question to yourself. Stock and debtors method itself, they themselves will say prepare stock account, debtors account, branch adjustment account. Then it is stock and debtors method. Prepare branch account. It is, be sure it is debtors method. Debtors means only one account, branch account. Stock and debtors means they will definitely ask for the word branch adjustment. Are you clear, Ramji, with the doubt? Okay, thanks. From the top again, from the top. Delhi, Rukmani Stores, Delhi invoices goods to branch at 20% less than catalog price, which is cost plus 50%, with the instruction that cash sales were to be made at invoice price and credit sales are to be made at catalog price and allows a discount on prompt payment. Okay, right, right, patiently. Patiently, I will start with the small working. Okay, question number 7. Okay, okay, friends. Delhi goods 20% less than the catalog. If my cost is rupees 100, if my cost is rupees 100, catalog price is cost plus 50%. Catalog price is cost plus 50%. Okay. cost plus 50%, 150. If cost is 100, catalog price is 150 and invoice price is 20%. Invoice price is 20% less than the catalog price. Okay, invoice price is 20% less than the catalog price. Is this clear? Is this clear? If cost is 100, IP is 120 and catalog price is 150. How did I find out? Catalog price is 50% more than the cost. So if cost is 100, catalog price becomes 150 and invoice price is 20% less than the catalog price. So if catalog price is 150, invoice price will be 120. Friends, if it is cash sales, it is at invoice price. If it is credit sales, it is at catalog price. Cash sales happens at invoice price and credit sales happens at catalog price. Credit sales, because this is essential, because my branch stock account will be at invoice price. My branch stock account will be at invoice price. So if they give credit sales as 150, I should record it as 120 only, because 150 is catalog price, whereas my branch stock will be at invoice price. Anybody not understanding can unmute and ask me. I believe the class is following what I am explaining. Okay, so one thing is clear. Okay, whenever they give the cost price, they give the invoice price and catalog price or differential price. I need to find out that, because that is very essential for me to prepare my branch stock account. Okay, if I look at it, branch stock opening and closing balances are given. Branch debtors only opening. Branch furniture only opening. Cash sales they have given. Credit sales we have given. We know how to convert it into invoice price. Goods invoiced to branch is given. Goods returned by branch at invoice price is given. Expenses paid by head office is given. Petty expenses paid by branch is 11,000. Okay, fine. Right? Cash received from branch debtors is given. Remittances by branch to HO is given. Discount allowed to branch debtors 185. Branch bad debts 15,800. Goods returned by branch debtors 12,600. It was decided to make a provision of 42,500 on the closing debtors, fine, and depreciate the furniture by 10%. Okay, you need to prepare the cash account in this question. You need to prepare the cash account in this question because your cash sales 1360 and your collection from debtors is 1865. Okay, expenses paid by HO you leave it. Expenses paid by branch is there. Remittances by branch to HO is there, so that you will get the closing. In this question, if they have not given the remittance by branch to HO, question becomes simpler, that whatever is my cash sales by plus collection from debtors is remitted to HO. Since they have given remittances by branch to HO, we need to find out, should I prepare my stock account? Should I prepare my stock account? Should I prepare? The answer is no. When I have opening stock, closing stock, goods sent, okay, goods invoiced to branch, it is there. Goods returned by branch is there. So there is no requirement of preparing stock account. But whenever you are free for this question, prepare the stock account and see. It will be interesting because you have to convert your sales, credit sales, which is at catalog price, into invoice price, because stock should always be at invoice price. The question asked is prepare branch account. If they have asked branch stock account, how you would prepare? Whenever, even during the break, you just prepare and see. Probably I will also try to prepare if I find time, so that we can try whether it is matching with both of us. Now let us prepare branch account. Now let us prepare branch account. To balance brought down, okay, stock. The question says a stock 4,50,000, 4,50,000, 4,50,000. Oh, I need to prepare the debtors account to find out the closing debtors. I need to prepare the debtors account to find out the closing debtors. Okay, I will prepare it while, okay, I started without understanding that. I'll do that, don't worry. Debtors 3,60,000, 3,60,000. Furniture 1,20,000. Furniture 1,20,000. I'll prepare the working notes. Don't worry, leave it to me. Furniture 1,20,000. Okay. By balance brought forward, by balance brought down. Okay. Stock reserve. How to find out the stock reserve? This is at invoice price. We know what is the invoice price. Invoice price is 120, cost is 100. Invoice price is 120, cost is 100. So approximately can I take 1/6 20 as my loading? The loading is nothing but difference between IP and CP is my loading. Invoice price and cost price is my loading. Okay, which is nothing but 1/6, my dear friends, which is nothing but 1/6. Okay, so if this is opening stock, okay, my loading will be approximately 75,000. My loading will be 75,000. I hope the class understands how I am finding the loading. Difference between invoice price and cost price is known as loading. Okay, goods is sent to branch. Goods invoice to branch 32,10,000. Okay, okay. Goods sent to branch 32,10,000. 32,10,000. Goods sent to branch, that is nothing but the loading. Okay, nothing but the loading. Again, 32,10,000 divided by 6. Okay, 32,10,000 divided by 6. Goods returned by branch. Goods returned by branch, okay, by branch 84,000, 84,000. So here again, goods returned by branch, okay, nothing but loading, okay, nothing but 84,000 divided by 6. 84,000 divided by 6, 14,000. 14,000. Then, okay, then cash sent to branch, which consists of 1,25,000 plus 1,80,000 plus that's all 1,25,000 plus 1,80,000. Okay, cash. Okay, nothing but remitted to branch. Okay, nothing but 1,25,000 plus 1,80,000. Okay, then okay, cash remitted to HO, which is also directly given here as 32 lakhs, as 32 lakhs, as 32 lakhs. So this account will consist of opening assets and liabilities, goods sent, goods returned, cash sent, cash returned. On the opening stack, I have done the stock reserve. Goods sent, I have sent then the stock reserve. Goods returned, I have sent did that stock reserve. I can directly go for closing balances. Balance carried forward. Okay, balance carried forward. My stock is given to me itself. Okay, the question itself gives stock as 5,10,000. 5,10,000. I will find out my debtors. I will do the working note. My furniture, okay, the closing balance is opening balance 120, depreciate furniture by 10%. So 90% of this will be the closing balance. 90% of this will be the closing balance, and my cash I need to find out. I need to find out. Okay, and in my credit side, I will have on debit side balance carried forward. Okay, stock reserve. Okay, nothing but on the closing stock divided by 6. Okay, 85,000. Now I prepare my debtors account. Now I prepare my debtors account, my dear friends. I prepare my debtors account. Okay, balance brought down. The opening balance of debtors is 3,60,000. The opening balance of debtors is 3,60,000. My credit sales, my dear friends, will be 21,50,000. 21,50,000 is my credit sales. Okay, goods invoice to branch, go to expenses, salary and paid salaries, petty expenses, cash received from debtors 18,65,000. Cash 18,65,000. Cash received from debtors 18,65,000. Discount 1,85,000. Discount 1,85,000. Okay, bad debts 15,800. Bad debts 15,800. Bad debts 15,800. Sales return, okay, 12,600. Sales return 12,600. Sales return 12,600. Okay, provision for discount is 42,500. 42,500. Okay, leading me to my balance carried forward. Leading to me to balance carried forward. Okay, I'm getting 3,89,100. If you get a different answer, please tell me. If you don't understand anything also, please let me know. Okay, okay, okay. I am preparing my cash statement, my dear friends. I am preparing my cash statement. Okay, right? Cash sales, okay? Cash sales given in the question is 1360. 1360. Collection from debtors, okay? We all know what is the collection from debtors, 18,65,000. Less, my dear friends, cash sales, credit sales, goods invoice, goods returned, expenses paid by HO, rent, salary, petty expenses paid by branch, petty expenses, okay, 11,000, 11,000, okay, and remittances by branch to HO, remittances, 32 lakhs, 32 lakhs. Discount, branch bad debts, etc. Okay. So closing cash balance, okay, I'm getting 14,000. I'm getting 14,000 as closing cash balance. One rare question, but I'm very happy we worked that. I'm very happy we worked this because we will know how to. You can prepare it as an accountancy, or I have prepared it as like this. So my closing debtors is 389,100. My closing cash balance is 14,000. My closing cash balance is 14,000. Okay, so making my total, giving me a net profit transferred to HO, 3,71,100. 3,71,100 is the net profit transferred to HO. 3,71,100. Any doubt, ask me. I need to prepare goods sent to branch, so please hold back. As of now, if you have any doubt in this question, okay, you can work out this question under trading P&L method and check the answer. You can work out under stock and debtors and check the answer. Just a combo of these things to get more confidence. As I told you, we will do the stock account. I will also try to do it during the break. Okay, we'll do the stock account also, which will be interesting. As of now, I am preparing goods sent to branch. As of now, I am preparing because the question has asked, okay, goods sent to branch account. Okay, goods sent to branch account. Okay, branch stock, because I have sent the goods worth how much, 32 lakh, you can see, sorry, 32 lakh 10,000, 32 lakh 10,000. Okay, then loading, or you can even call it as branch adjustment, whatever it is. Okay, okay, whatever it is you can call. Okay, loading on goods sent, we have already prepared those things. We have already know these things by preparing the branch account. Okay, goods, okay, 5,35,000. Goods returned, we already know it is 84,000. We already know this as 84,000. And the loading of that is 14,000. Loading on You can even write this as a adjustment. Don't worry about the nomenclature, only about the style in the way which we understand the account. 14,000. We all know what is this balancing figure. This is trading account. We all, I'm leading you to the independent branch. Independent branch, this will come as buy goods sent to branch because it is a sale by HO to the branch. It is a sale. So it will come in the head office trading account as buy goods sent to branch. Okay, this will come in the trading account, okay, of head office. This is how we prepare our goods sent to branch account. If at all they ask you, this is how we prepare, so that this will appear as a sales in my HO books. This will appear as sales in my HO books. Please wait. And now our focus shift to, okay, what is popularly known as independent branches. Now our focus shift to independent branches. Okay, the term independent means operational freedom for the branch. Operational freedom for the branch. Branch can make local purchases. Branch can need not remit all the cash to the head office. They can incur some local expenses. Above all these things are valid point, but above all, accounts of the branch are maintained at the branch itself. Accounts of the branch are maintained at the branch itself in the year end or during every period end. The branch will send a trial balance. Based upon the trial balance, either the trial balance or the branch profit will be mingled with that of the head office, okay. Independent branch, the basic characteristic, branch can make local purchases, incur expenses on its own, and will have operational freedom. These apart, branch can also, my dear friends, branch can also maintain its books and on a periodical basis provide the trial balance to the head office. So this is the key feature of independent branch. Okay, financial statements for independent branch will be prepared. Financial statements will be prepared in a columnar format, having head office and branch as columns. Having head office and branch as column. That is the key element of independent branches. That is the most key element of independent branches. So how this independent branch work, what are all the characteristics, that's what we are going to discuss in today's class. That's what we are going to discuss in the next few minutes. Okay, right. Independent branch sends trial balance to the head office. Then there is a reconciliation process that goes on. Okay, the balance appearing in the books of HO as branch account. Majorly this will be debit balance because HO sells goods to branch, and the balance appearing in branch books as HO account should normally tally. If it doesn't tally, the reasons for the difference can be goods in transit, cash in transit, errors or omission in recording. The difference should normally be the branch account appearing in the head office book, which will be a debit balance majority of the times, and the head office account appearing in the branch, which will be a credit, should normally match, should normally tally. If it doesn't tally, there can be three reasons for this: goods in transit, cash in transit, and errors or omission while recording the transaction. Errors or omission while recording the transaction. Can you please tell me, if it is goods in transit or cash in transit, who should pass the entry? Who should pass the entry for goods in transit and cash in transit? Anyone? No one? That's beautiful. The recipient should pass because the sender of the goods, be it goods sent to branch or goods returned by to HO, the branch or HO has already passed. The sender has already passed the entry. Only the recipient is supposed to pass the entry. In the case of cash in transit, branch sends cash to head office. Branch would have already passed the entry. In the books of head office, it will be cash in transit account debit to branch. Similarly, goods. In the branch book, cash in transit or goods in transit account debit to head office. So, please understand, for goods in transit and cash in transit, entry needs to be made only by the recipient. Entry needs to be made by the recipient entity. That is, it can be a branch or the head office. Whoever it is, they need to pass. Okay. Rectification of error. Sorry, friends. Just trying to understand if somebody is unable to catch up with the app. Okay, rectification of errors, my dear friends. Rectification of errors, whoever has made the error or the omission will pass that entry, am I clear to you? So depending upon who, goods in transit, cash in transit will be passed by the recipient entity, and rectification of error will happen at the end where the error has occurred. So I am not giving that part of it. Error you can understand. Now, if goods are sent to branch at a price higher than the cost price, if goods are sent to branch, okay, if goods are sent by HO to branch at a price higher than the cost price, loading, or what is popularly known as stock reserve, has to be removed on the branch closing stock slash goods in transit. Okay, or if goods are sent by HO to branch at a price higher than the cost price, then my dear friends, we have to remove the loading. Loading, which is nothing but stock reserve, has to be removed on what? Branch closing stock and goods in transit in the profit and loss account of HO. In the profit and loss account of HO. Repeating this point, if goods are sent at a price higher than the cost price, then stock reserve has to be removed. Remember, not on head office account. Okay, on the branch closing stock or goods transit, goods in transit. It will be only on the branch closing stock or goods in transit. But when it is removed, it will be removed from the head office profit and loss account. On the credit side, you will put two stock reserve. Two stock reserve in the head office column. You will put this. Okay, in the head office column, you will put it. Just a minute. Okay, it will be removed in the branch closing stock or goods in, okay, it should be removed from the branch closing stock or goods in transit, and it will be removed in the P&L account of head office, in the P&L account of head office. Any doubt, please ask me. I believe you are following. I believe you are following. I am going to the 8th question. I am going to the 8th question, my dear friend. I am going to the 8th question in page number 12. I am going to the 8th question in page number 12. Pass necessary journal entries in the books of the independent branch of Messrs. TPL and Sons wherever required. Wherever required, we need to pass to rectify or adjust the following transactions. Repeating, pass necessary journal entries in the books of an independent branch wherever required to rectify or adjust the following balances. Question number 8 in page number, question number 8 in page number 12. Question number 8 in page number 12. Okay, I am going to pass journal entries. Journal entries in the books of the independent branch. Journal entries in the books of independent branch. Particulars, debit, credit. Okay, particulars, debit, credit. Okay, I'm going to pass the journal entries in the books of the branch. Let's go one by one. 1. Branch paid salary of 5,000 as manager to a head office manager, but the amount paid has been debited in the salaries account of the branch. 5,000 paid to the head office manager salary. So actually I should have passed the entry head office account debit to bank, because the money has to be received from the head office. So head office will become my debtor. Head office account debit to bank. But actual wrong entry I passed is salaries account debit to bank. The rectifying entry now is, okay, one by one. For one, rectifying entry now is head office account debit, okay, to salaries. Head office account debit to salaries 5,000. 5,000. I hope you can write the narration later. Okay. Salaries, okay. Head office salaries wrongly accounted, now rectified. Head office salary wrongly accounted, now rectified. I know you can write the narrations later. B. A remittance of 150 sent by the branch has not been received by head office on the date of reconciliation. For this, the branch need not pass any entry. For this, the branch need not pass any entry because only the recipient has to pass, that is the head office. So for second, no entry. For second, no entry. Third, branch assets account retained at head office, depreciation charged for the year 15,000 not recorded by the branch. So the assets are there in the head office. While charging depreciation, normally they pass the entry depreciation account debit to HO. I mean depreciation account debit to asset. Normal entry depreciation asset account debit to asset. But head office will not take these expenses. They will debit it to the branch. So the head office would have passed the entry branch account debit to assets. The head office would have passed the entry branch account debit to assets. Branch, for the branch, this is an expenditure. For the branch, my dear friends, this depreciation is an expenditure. So expenditure means obviously debit to head office. Branch account debit, depreciation account debit to head office. In the head office book, branch account debit to asset. So if you cancel branch and head office and see, it will be depreciation account debit to asset. That entry will only ultimately come because anyhow branch balance and head office balance will finally get cancelled. But as entry, if two different entities are passing, then the entry for the branch will be depreciation. Sorry, depreciation account debit to head office. Anybody not understanding, please unmute and ask me. Your silence means either you are understanding or whatever certain then you will not understand. So why to ask him? Or you are sleeping or nobody is there. Yeah, I can, friend. Suppose depreciation for asset of branch maintained at HO. So normally an entry for a is depreciation, okay, depreciation account debit to asset. This is the entry. But since the assets are maintained at HO, they only has to reduce the asset value. So they will pass it as branch account debit to asset because the reason is simple. They will not take this depreciation as an expense. They will say branch, you take it as your expense. It is not my asset. It is your asset. For convenience sake, I am maintaining the books. So they will pass the entry branch account debit to asset. In head office, is branch is debited. In branch, head office should be credited. And debit is depreciation. So ultimately, if you see this and this, If it is goes off, it is depreciation account debit to asset. So in the branch, when you are passing, we have to pass the entry as depreciation account debit to head office. Is that clear, my dear friend? Yeah. Fourth one, head office expenses 75,000 allocated to branch but not yet recorded in the branch, same manner. Okay, expenses account debit to, head office 75,000. Expenses account debit to head office 75,000. Expenses of head office allocated to branch. When expenses are incurred by the head office, they will not take these expenses. Branch has to reimburse them. So branch will become their debtor. Branch account debit to bank. They would have passed the entry. In my books, in the branch book, I have to pay them. So they become my creditor, and it is for an expenses which should go and hit my P&L account. So expenses account debit to head office. Expenses account debit to head office. Fifth question. Head office collected 60,000 directly from branch customer. The intimation of the fact has not been received by the branch. So my dear friends, branch debtors will be high by 60,000. They have actually paid, but did not pay to the branch. They paid it to the head office. Had they paid it to the branch, the entry would have been bank account debit to debtors. Since it has been paid directly to head office account debit to debtors. Head office account debit to debtors 60,000. 60,000. Since it has been directly paid to head office, the rectification entry is head office account debit to debtors 60,000. Seventh, branch incurred advertisement expenses of 10,000 on behalf of other branch but not recorded in the books of the branch. Branch incurred, okay, sorry, there is a sixth entry, sorry, I missed it and went. Goods dispatched by the head office amounting to 50,000, not received by the branch till the date of record. Goods dispatched by the head office amounted to 50,000. So the sender would have already accounted it. Only the receiver has to now account it. So branch will record the transaction as goods in transit account debit to head office. Branch will record it as goods in transit account debit to head office. Okay, 60,000. Sorry, 50,000. 50,000. 50,000. Branch incurred advertisement expenses on behalf of other branch but not recorded in the books. But the entire transaction is not recorded in the books. Okay, I will give you the debit as head office or other branch. Please write it in the exam also like this. It can be directly debited to other branch, or if head office is the centralized place, then I will debit head office to bank, okay, 10,000. 8. Head office made payment of 16,000 for purchase of goods by branch but not recorded. If I had paid, if the branch has paid, creditors account debit to bank. Since the head office has paid this money, creditors account debit to head office. Creditors account debit to head office. $16,000. Please check and let me know if you don't understand anything. I'll take your question. Go ahead. In the seventh, it should be normally reimbursed by the other branch. Because every branch is an independent branch, they can reimburse. Only if the other branch is a dependent branch, head office will reimburse. They are our debtor. I have incurred money on behalf of them. They have to pay me, so they are my debtor. Okay, okay, friends, friends. Question number 9 is also part of assignment. Question, because now you will pass it in the books of head office. I don't have an assignment. I have at the end given some assignment question. Okay, in the class, okay, after the class, there are some assignment questions which I have given you. Okay, which you are going to practice today itself and close this chapter. Some 6 plus 1. Now I am allocating question number 9 also, for which you are practicing today and closing it. Okay, ensure to complete it today itself. Do not carry forward for the next day. Today itself, in the same heat of it, after the session is over, after taking some rest, today we will close branch accounts. That should be your criteria, and complete the assignment. And if you say you have completed, I will send you the answers for assignment. I am now in question number 10. I am now in question number 10. PK Company Limited, with their head office at Kolkata, invoice to their Mumbai branch at invoice price. The invoice price is less than the list price, which is cost plus 100%, with the instruction that sales are to be made at list price. From the following particulars, ascertain the profit earned by head office as well as the branch. Opening stock, purchases, goods sent to branch at cost price, goods received from head office at invoice price, sales, trade expenses. Stock at head office is valued at cost price, but those of branch is valued at their cost price, which is nothing but invoice price. Both places cost price only. Okay, the wordings should not confuse you. Oh, can stock be valued at invoice price? The answer is no. Okay, but both the prices, it is only at cost price. For branch, cost price is nothing but the invoice price. Read through the question. Go ahead. Yeah. Which side you have a difference? What, which side? In that? Okay. Hold yourself. Hold yourself. I'll come to that. I got your question. Friends, okay. Question number 10. Okay. Now I will take some time to explain you the question. Then we will start. I will take some time to explain you the question. Question number 10. Question number 10. Okay. Now let me take PK Company Limited with their head office at Kolkata invoiced goods to their Mumbai branch at invoice price. The invoice price is 20% less than list price, which is cost plus 100%. So, if cost is equal to 100, list price is cost plus 100%. Okay, list price is cost plus list prices cost plus 100%, which is 200, list price is 200, invoice price will be list price minus 20%. Okay, list price minus 20%, 160. Cost is 100, list price is 200, and invoice price is 160. Any doubt up to this, please ask me. I hope the class is following. If cost is 100, list price is 200, invoice price is 160. Invoice price is 160. Now, when branch sells, they sell it as list price. They sell it as list price. So, can I say that the branch GP is 20%? Can I say that the branch GP is 20%? Can I say that the branch GP is 20%? Correct? Correct, Sai? Yeah, because they receive it for 160 rupees, they sell it for 200, the difference is 40. Okay, the difference is 40, my dear friends. Okay, which is nothing but 20%, which is nothing but 20%. So, when branch GP is 20%, for HO, direct sale, GP is 50%. Direct sales, because their cost is 100, when they directly sell to the customer, they are selling it for the list price of 200. So 100 rupees is the profit, which is 1 by 2, which is nothing but 50%. When head office directly sells, it makes a 50% profit. When head office, okay, sends to branch, or it sells to branch, profit is 60 by 160. Profit is 60 by 160. Profit will be 60 because their cost price is 100. They are sending it to branch at 60. So cost price will be 60 by 160. Anybody not understanding can unmute and ask me. So I hope the class is clear. What will be, sir, go ahead. Yeah. Yeah, I can explain from the top. If it is breaking, I can explain from the top. Please listen. If cost price is 100, list price is cost plus 100%. So 100 plus 100%, 200. Okay, and invoice price is 200 minus 20% of 200, 160. So when branch sells, okay, they buy it for 160, sell it for 200. Branch buys goods from head office for 160 and sells the goods for 200. They make a profit of 40, which is nothing but 20% of sale price or list price. List price and sale price are the same. List price and sale price are the same. So they make 20% profit. They make 20% profit on the sales made by them. Whereas head office has two sales. Head office has two sales. One directly to the customer, where their manufacturing cost is 100 rupees, sale value is 200 rupees. So 1 by 2. Out of 200, 100 is profit. 1 by 2 is their profit, which is 50%. Which is 50% on direct sales. On the goods sent to branch, their profit will be, they make cost of making is 100 rupees, invoice price is 160. So for every unit I will make 60 out of 160. If sale value is 160, I will make a profit of 60. So 60 by 160. Is the class clear? Let us start preparing the trading profit and loss account in the columnar profit manner for both head office and branch. Goods sent to branch at cost price. Goods sent to branch. Goods sent to branch. They have given it at cost price as 62,500. That is, if this is 62,500, if this is 62,500, this is what? Okay, this is what? So they have given it at cost price. I convert it into invoice price. 62,500 divided by 100 into 160. So, goods sent to branch is 1 lakh. Goods sent to branch is 1 lakh. Goods sent to branch is 1 lakh. Goods received from head office at invoice price for the branch it is 96,000. Okay, goods received from HO is only 96,000. They sent 1 lakh, it is only 96,000. 4,000 stock in trade which will appear in the asset side of balance sheet. 4,000 stock in trade which will appear in the asset side of balance sheet, and there is one more adjustment. When we come to that, I will discuss about it. Sales 170 and 80. Trade expenses 14,000, 18,000. Trade expenses 14,000, 8,000, sorry. $14,000, 8,000. The question has not given the closing stock, but we can find out. Gross profit. Gross profit. For the branch, it is simple. 20% of sales. For the branch, it is simple. Directly 20% of sales, because they receive for 160 rupees, sell it for 200 rupees. So 40 per unit. So for 200, it comes to 20%. So for branch, it is very simple, 16,000. For head office, I will work out, then tell me whether you understand. 50% of sales, okay, that is direct sales into 50%, and okay, 60 by 160 of goods sent to branch. Okay, nothing but 1 lakh into 60 divided by 160, 37,500. 37,500. Any doubt, please ask me. Go ahead. Uh, I will tell you. The question says goods sent to branch at cost price is 62,500. So when 62,500 is 100, what is 160? Closing stock will become the balancing figure. Yeah, I will tell you how we will say that. Suppose if I put 1 lakh here, suppose goods received from head office 1 lakh, then what I will do is I will put stock in transit 4,000. So it will be again 72,000. Okay. But whereas what we did is we only took 96,000. So we can avoid doing the stock in transit in the trading account. We can avoid the stock in transit in the trading account because it is an adjustment entry. Stock in transit account debit to head office has nothing to do with our trading account. So we don't take it to the trading account. I'm continuing. Gross profit for head office, it will be 85,000 plus 37,500, and for branch it will be 16,000. There are no other expenses apart from trade expenses given. There are no other expenses. So what happens is, okay, net profit of branch transferred to HO directly, that's 16,000, yeah, because there is no expenditure. So net profit of branch 16,000. Now I come to stock reserve. Now I am coming to stock reserve. Okay, friends. Stock reserve. Stock reserve needs to be completed on closing stock of the branch and closing goods in transit. Stock reserve needs to be computed on closing stock of the branch and closing stock, stock in transit and stock in transit. Stock reserve on closing stock of branch, that will be 72,000 divided by 160 into 60. Okay, on goods in transit. On goods in transit, that is 4,000 into 60 divided by 160. So stock in transit is calculated both on closing stock and on goods in transit. Any doubt, please ask me. Sorry. Yeah. Stand corrected. Yeah, you are right and wrong. Yeah. Okay. One of the questions can be, I'm taking the question and also giving the answer. Sir, why you have not done stock in transit or stock reserve for opening stock of branch? Opening stock of branch. Friends, there is only one reason. If it is opening stock reserve, it should appear in the trial balance. You need not compute it. It should appear in the trial balance they are giving. It should appear in the trial balance. So last year probably this type of variations are not there. So that's why. But suppose you want to take an assumption, no sir, what is given is not a trial balance. Probably there are more items to this. So I will also compute the opening stock reserve. Please go ahead and compute. It is not wrong. But make the assumption clear. It is assumed in the last year also it is so, and the trial balance is not fulsome. But instead, we can make this as the assumption. That's why I have not passed the entry for opening stock reserve. I am there in question number 11, okay, of the material. Question number 11 of the material. Pushkar Enterprises has its head office in Ranchi and branch in Imphal. The following is the trial balance extracted for the year 31st March 2013. Capital, debtors, 3 lakhs and 1 lakh 80,000, creditors, purchases, sales, goods sent to branch at invoice price. Sent is 1140, received is 1125. Sent is 1140, received is 1125. So 15,000 in transit. Fixed asset, opening stock, opening stock reserve. This is what I said. They will give it as a part of trial balance. Opening stock reserve. Okay. HO slash branch current account. 5 lakh 25, 3 lakh 60. Let us take a calculator. 5 lakh 25,000 minus 3 lakh 60,000. 5 lakh 25,000 minus 3 lakh 60,000, I think makes it 1 lakh 65,000. Correct? Is it 1 lakh 65,000? Yeah. Of that 15,000, is due to stock in transit. Of that, this 15,000 is due to stock in transit. The remaining 1,50,000, the remaining 1,50,000 is due to cash in transit. Is due to cash in transit. Administrative and selling expenses, cash and bank, provision for bad and doubtful debts. It is appearing on the credit side, means opening provision. Opening provision. Other relevant information. All goods are purchased by HO. Goods are sent to branch at cost plus 25%. 1/4 on cost, 1/5 on sale. Stock at the end, HO branch. Depreciation is to be provided on fixed assets. Bad debts provision to be maintained 5% on debtors at the year end. Cash in transit, we know that. Goods in transit from HO at invoice price 15,000. Prepare in columnar form the branch HO trading profit and loss account and a combined balance sheet of the enterprise. Friends, I want you to try it out. I'm stopping the presentation. We will try it out. Then we will come back and verify our answers. I'm also going to work along with you. So we will try it out and we will come back and do the answers. Please try it out. I'm going to the answers now. I'm getting a net profit of the branch 75,000 and net profit of HO 100,500. Are we all getting the gross profit correctly? 960 and 1710. The gross profit works out like this. Opening stock, purchases, goods sales, goods sent to branch, goods received from HO, closing stocks which are given. All these information are given. So I am getting a GP of 960 and 1,71,000. Using this, I am preparing my net profit of the head office and branch. First, branch 1710 GP, administrative and selling expenses 74,500, depreciation 20,000, provision for bad and doubtful debts. One of our friends said, like that you can work out. That is 7,500 on the credit side and 9,000 on the debit side. 7,500 on the credit side, 9,000 on the debit side. Or I have worked it out as a closing provision minus opening provision. But the answer will not change because of that. Even if you are put here 7,500 and 9,000, the net is 1,500 debit and net profit transferred to head office will be 75,000. Net profit transferred to HO will be 75,000. So when I look at HO, GP 960, reversal of provision for bad debts, as our friend says, you can put 27,000 here and 15,000 in the debit side. You can put credit side 27, 15. I have taken the 12,000 directly. Opening stock reserve and 75,000 branch transferred profit. In head office, admin expenses given, said depreciation. Now coming to closing stock reserve on the closing stock of 45,000 into 20% and stock in transit 15,000 into 20%. I get 100,500. Enna Anjali, what was the mistake between our calculations? Go ahead, Ramji. Yes, yes, stock reserve. Closing stock is 45,000 in the branch. 45,000 in the branch. And the question says, and the question, if I can go to the question says, okay, all goods are sent to branch at cost plus 25%. So, 1/4 of cost, which is nothing but 1/5 or 20% of invoice price. So, if you look at it, I have put 45,000 into 20%. 1/5, 44,000, 45,000 into 1 by 5. For goods in transit also 15,000 into 20%. People are not getting, sometimes somebody said 68,000. I don't know what mistake they did. If whether it is on provision for bad debts, they only created the closing provision and left the opening provision that is there. But please do like this. So 100,500 is the entity's profit and my balance sheet looks like this. Raja, Raja. இப்போ opening provision is 27,000 in our head office. So I can put 27,000 on the credit side and on the debit side, the closing debtors is 3 lakhs. 3 lakhs into 5%, 15,000. You can put 27 and 15, or you can put like how we do in our 11th standard and all. Closing provision minus opening provision. If the closing provision is higher than opening provision, it is an expenditure. Vice versa, so it's an income. Yeah, sure. I have to go a little down, but up to this. Yeah, sure. You want to go to capital, add net profit. Capital, opening capital, add net profit. That is the closing provision. That is the closing provision. Closing debtors into 5% is the closing provision. One minute, I any doubt, ask me, friends. Have you all completed? Shall I move on? We go to the next level of understanding, that is foreign branch. In independent branch, if at all there is a question, I feel that journal entry will be a sort of question, which is a very often, or simple trading profit and loss account, very rarely balance sheet, but trading profit and loss account. The last part of our discussion on branch accounts comes from foreign branch. The last part of our discussion is foreign branch, that is branch located outside India, branch branch located outside India for an Indian company, branch located in India for a foreign company. Both are known as foreign branch. Both are known as foreign branch. Branch located in India, outside India for an Indian entity, and branch located in India for a foreign entity. Both are known as foreign branch. Okay, friends, both are known as foreign branch. Okay. AS 11 specifies the mode of accounting or reporting of foreign branch. Okay, the mode of accounting are AS 11 divides foreign branch into integral operation and non-integral operation. Okay, I divide the foreign branch into two. That is, the accounting standards divide the foreign branch into two. Integral foreign branch, that is part and parcel of the head office. Integral foreign branch and non-integral foreign branch. Okay, right? For our ease of understanding, we can say integral branch, integral operation means dependent branch. Non-integral operation means independent branch. Okay, integral, part and parcel of the organization. Almost policies and procedures are laid down by the organization. Integral branch. Non-integral operation means the branch has an independent existence. The branch has an independent existence and is not dependent, and it is not dependent on the head office. Okay, right. Where exactly will this difference come, or where exactly will all these things matter in terms of difference and other things, is on the conversion end, my dear friends. All these things will come and be important to us when at the time of converting the foreign currency into Indian currency or Indian currency into foreign currency. Okay, so we call this as translation of foreign currency into Indian currency or vice versa. Okay, translation of foreign currency into Indian currency or vice versa. My dear friends, fixed assets are converted at, any idea? Do you remember the word which we used to write? Okay, that's beautiful. Specific rate. Okay, that is okay, rate prevailing on the date of transaction. Okay, fixed assets are converted at specific rate, that is rate prevailing on the date of transaction. Date depreciation on fixed asset will again be at specific rate only. When fixed asset is at specific rate, depreciation on the fixed assets will also be at specific rate. Opening current assets and liabilities, basically opening stock, opening rate, that is rate prevailing on the first day of the year. Okay, closing current assets and liabilities will be at closing rate, nothing but rate prevailing on the last day of the year. Rate prevailing on the last day of the year. Closing assets and liabilities at closing rate. Okay. Revenue transactions. Revenue transactions average rate, which is nothing but opening plus closing. Okay, opening plus closing divided by 2. Opening plus closing divided by 2, where fluctuations are several, then weighted average. Exam, they don't use weighted average. It's opening plus closing divided by 2. It is opening plus closing divided by 2. Revenue transactions. Okay. Goods sent to branch and branch account. Do you remember? Direct. That is balance appearing in the books of head office. That is balance appearing direct. We call it as direct. We don't take any thing. We call it as direct. Direct is nothing but balance appearing in the books of head office. Direct is nothing but balance appearing in the books of the head office. And the last part is known as foreign currency fluctuation. Here is the difference. Okay, here is the difference. If it is integral operation, then foreign currency fluctuation will be treated as reserve. If it is integral operation, foreign currency fluctuation will be treated as reserve. If it is non-integral operation, okay, foreign currency fluctuation will be treated as revenue, that is either as income or expenditure. Repeating, if it is integral operation, my dear friends, if it is integral operation, please remember, if it is integral operation, then I will consider foreign currency reserve, foreign currency fluctuation as a reserve, whereas if it is non-integral operation, suppose if it is non-integral operation, I will take it to the revenue account. Go ahead. The reason is very simple. If it is an extension of my own entity, I won't consider this foreign fluctuation as an, I will consider it, it affects my overall profit right from the accumulated years. Whereas if it is non-integral, year to year, I will split up and see. That is the simple reason. 1 year profit, 1 year loss, If it is integral, I don't want to record it as income and expenditure. I want to go on, take it as reserves. Go ahead. Hmm. Got slightly confused. Um, okay, before in another 15-20 minutes, I'll clarify it to you. I'll clarify it to you. Maybe you're right. Maybe our friend is right. Maybe I will. I think she is right. I think I interchanged the concept. If it is integral operation, I'm sorry, friends. If it is integral operation, it will be a reserve. Okay. If it is no, it will be a revenue. If it is integral operation, sorry, yeah, I got it corrected. If it is integral operation, it is revenue. If it is non-integral operation, it will be a reserve. If it is non-integral, I'll explain you also the logic. Now I got it. Okay. If it is non-integral operation, okay, reserve. Okay. Yeah, I made the mistake. If it is integral operation, okay, it is the profit made by your own entity. It is an extension of your entity, so it should be taken to revenue. If it is non-integral operation, it is profit of another entity which you are including it in your books. If it is non-integral, means it is an independent entity, so it should be reserved. I stand corrected, Sai. Thanks very much. Okay, so it is if it is integral, it is revenue. It is not in non-integral, it is reserves. Friends, I have always held in the classroom also. If foreign branch comes, it's a bonus. We are never quitting that question. It's a bonus if foreign branch comes, and I'm taking up the really a straightforward, challenging question straight away. Yen Limited Bombay has a branch in Sydney. At the end of 31st March, the following ledger accounts has been extracted from the Bombay office of the Sydney. Share capital, reserves, land, building at cost, less depreciation reserve. Plant and machinery at cost, which is also there at the branch, plant and machinery depreciation reserve. Debtors and creditors, opening stock, branch stock reserve, that is the beginning. Cash and bank, purchases and sales, goods sent to branch, managing director's salary, wages and salaries, rent, office expenses, commission receipts and income, branch and head office current account. The following informations are available to you. Closing stock of Bombay, Sydney. Head office always send the goods to the branch at cost plus 25%, one-fourth on cost. Provision to be made for doubtful debts, 5%. Depreciation to be provided on building and plant and machinery, 10 and 20% on written down value. So what they have given is cost accumulated depreciation. I need to reduce and find the written down value and do it. Managing director is entitled to 2% commission on net profit, and income tax is to be charged at 47.5%. You are required to convert the branch trial balance into rupees using the following of the rates of exchange: opening rate, average rate, closing rate, fixed asset rate. Prepare trading profit and loss account showing to the extent possible HO results and branch results separately. Read through. Kandipa Raja. Shall I? Conversion of, okay, trial balance into Indian currency. Okay, question number is, no, question number is 12. Question number 12 in page number 15. Question number 12 in page particulars. Okay, in Australian dollars, debit credit rate of conversion. Okay, in INR, debit credit. Okay, friends, let us start. Okay, the plant and machinery 200 and its depreciation reserve. Okay, plant and machinery 200, plant and machinery 200, rate of conversion they have given us for fixed assets at 48. 48. Okay, we are also doing it in lakhs. So the question is in thousands. Sorry, we are also doing it in thousand. Okay, we are also doing it in thousand. Okay, okay, depreciation reserve. Okay, so far 130 is there. So far 130 is there. At the same rate only this needs to be computed. At the same rate only this needs to be computed. Okay, right. Okay, right. Plant and machinery depreciation. Debtors, creditors 60/30. Debtors and creditors 60 and 30. The closing rate is the rate of conversion. The closing rate is the rate of conversion, which is 54. The closing rate is the rate of conversion, which is 54. Okay. Debtors and creditors. Okay, and opening stock is 20. Okay, the rate of conversion of opening stock is opening rate is 50. Opening rate is 50. Opening rate is 50. Okay, after that opening stock reserve, branch stock reserve, okay, will not come. And cash and bank balance 10, cash and bank 10, it will be on the closing rate of 54, it will be on the closing rate of 54, cash and bank 10, purchases and sales 20 and 123, purchases and sales, okay, 20 and 123, average rate is 52 given in the question, 52 given in the question, 20 and 123 purchases and sales. Okay, goods sent to branch, goods sent to branch is is $5, whereas I need to take direct, so I will take 100. I will take 100. Okay, MD salary will not come. Wages and salaries 45. Wages and salaries. Okay, take it as 45 at 52 as the conversion rate. 52 as the conversion rate. Rent 12, again 52 is the conversion rate, average rate. Office expenses, my dear friends, office expenses 18, okay, 1852 is the conversion rate, 52 is the conversion rate, okay. Commission income, we have 100, again revenue item 52 is the conversion rate, and the last is branch account or HO account. Okay, here it is 7, whereas it is direct, so I will take 120, 120, it is direct, it is direct. Foreign branch is tallying. Okay, so go ahead with your doubt. Yeah, I can hear you. Go ahead with your doubt. Yeah, I can. I'm doing it as an adjustment. I'm doing it as an adjustment because anyhow it is at specific rate. It can tell me whether you are getting the same forex reserves, my dear friends. I mean, forex, foreign exchange fluctuation. It can tell me whether you are also getting the same. I did got your friend, got your point. I made the mistake. Please wait, your reserve will change. Please wait, the reserve will change. No, 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 no. No, no, no. Yeah, 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 yeah. Since the debit credit, I made a mistake. Just give me 2 minutes. Just give me 2 minutes. I'm just correcting myself. Is this correct, my dear friends? For opening stock, only opening rate, right? For debtors, creditors, closing rate. Sorry, friends. A lot of mistake. I just changed the column, so I got a little confused. இது கரெக்டா ராஜா? All of us 156 are we hitting it? Sure, 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 sure. I'm just preparing the trading profit and loss account in the usual format. Please take wages and salaries to P&L. Please take wages and salaries to P&L. Only if it is exclusively given as wages, we will consider it here. Opening stock is 1000. Purchases, okay. Purchases 1040 and sales 6396. 6396. Okay. Closing stock. Okay. As the question given the closing stock. Stock 1,50,000 and 3125. 1,50,000, which means 150. Please record it as 150. 1,50,000. We are doing it in thousand. And okay. 3125 into 54, right, is the closing rate divided by 1000. Okay, 168.75. 168.75. Okay, 54 is the closing rate. Okay, so 317 to 3125 divided into 54, my dear friends, divided by 1000. Now I will get my gross profit. Now I will get my gross profit. Is this the gross profit we are getting? I hope we are getting the same gross profit. Yeah. Not 45. Plus expenses 25 commission is 56 5,200 depreciation depreciation. The rate of depreciation is 10% on building and 20% on plant and machinery. Okay, on building, the buildings are 1000 minus 200. Okay, 1000 minus 200 into 10% on plant and machinery. On plant and machinery, okay, 2500 minus 600 into 20%. Similarly, 200 minus 130 into 20%. Oh no, sorry. Okay, plant and 9600 minus 6240 into 20%. Okay, 672. Then debtors provision for debtors, provision for debtors. The question says that provision for debtors should be 5%. Provision for debtors should be 5%. 280 into 5%. 280 into 5%. Similarly, for foreign branch, debtors is 3240 into 5%. Into 5%. Okay, provision for that. So, land, building, plant and debtors, creditors, opening stock reserve 4. Okay, opening stock reserve is 4. Opening stock reserve 4. Cash and bank, purchases and sales, goods sent to branch, managing director's salary, wages and salaries, rent, office expenses, commission receipt, closing stock. Okay, we'll do that. Provision for bad debts, depreciation. So I can now close my branch. Okay, net profit transferred to HO. Net profit, and I have a forex problem. I have a forex account of 156 on the debit. So foreign exchange fluctuation 156 on the debit. Net profit transferred to HO. Four seven three 4734.75. 4734.75 net profit of branch. Okay, 4734.75. Now in the head office, I have to make some provisions. the managing director, before that stock reserve on closing stock, okay, on the closing stock, okay. Head office always sends goods to branch at cost plus 25%, okay. Actually branch is also having their own purchases, you can see that branch had a $20 purchase, but very rare what to do. But okay, we will create the stock reserve on the closing stock. We will create the stock reserve on the closing stock to 20 percentage. So it comes to 33.75. It comes to 33.75. I understand that branch is also having their own purchase, but some such questions are very rare. But if it comes, please take the entire close. You can write the assumption the entire closing stock is considered to be from HO. Okay, from HO. So 33.75. Then comes MD's commission. Managing director is entitled to a commission of 2% on the net profit. MD commission. Okay, managing director's commission. Working note for MD commission. Okay, working note for MD commission. What is the profit? Profit before commission. Profit before commission is I'm getting a profit before commission of 4787. Rate of commission 2%. Therefore, commission on net profit will be okay 4787 into 2 divided by 102 into 2 divided by 102. I am getting 93.86. Even if you write it as 94, not an issue, but I'm getting 93.86. I'm getting 93.86. Okay, even we can write it as 94, not an issue, my dear friends. Okay, MD commission, we can write it as 94, not an issue. Not an issue, don't worry about it. Not an issue, don't worry about it. Okay. Provision for taxation. The question says, create a provision for taxation of 47.5%. So I do the working here. Okay. I do the working here. Profit before tax. Profit before tax. Okay. Profit before tax. I'm getting 4693. Tax rate is 47.5%. Okay, so tax will be, my dear friends, tax will be 2229.18. 2229.18, leaving you with a net profit of 2463.82. This is one of the questions which appeared long back. This is one of the most challenging questions that appeared. Otherwise, all branch accounts questions will be very simple, very similar. Okay, not very worrying factor. But this is the question where there were a lot of adjustments. Please look into it. Sorry, friend. Yeah, go ahead. Closing stock in the branch. Head office stock will always be at cost. Only stock reserve is only for closing stock at the branch. The preparation of P&L only, my dear friends, not a different. Only thing is the mark is only for this. This conversion is only the marketing aspect. Okay, this conversion is only the most important aspect of us. Okay, so otherwise it is one. The P&L is as simple as any other P&L you are preparing. Okay, very rare these type of adjustments. Of course, commission we know we can do. Uh, Ramji, I know you have told me that the mobile gets heated up. Just in a half an hour, we'll complete it, Ramji. I'm reading that May 2019 RTP question. ABC and Co. has head office at Newark, USA and a branch in Bangalore, India. Bangalore branch is an integral foreign operation of the foreign company. Bangalore branch furnishes you the crawling trial balance and additional information. Opening stock in everything is Indian rupees. Purchases, sales, debtors and creditors, bills of exchange, wages and salaries, rent rates and taxes, sundry charges, computers, bank balance, New York office account. Additional information. Computers were acquired from a remittance of $6,000 received from New York head office and paid to the suppliers. Depreciation 60% on computers. Unsold stock of Bangalore branch was worth 4,20,000. The rate of exchange on opening rate, closing rate. Okay, average rate is 58. Conversion in dollars shall be made to two decimals. You are asked to prepare the in US dollars the revenue statement for the year and the balance sheet on the date for the Bangalore branch as it would appear in the head office. You are informed Bangalore branch account showed a debit balance of 29,845.35 US dollars on 31/3 in their books, and there was no pending reconciliation items. There were no pending reconciliation items. My dear friends, can you try it quickly? Can you try it, please? Can you try it? It's a very simple conversion. Please try it. I'm directly going to the suggested answers, friends. Okay, okay. There is no forex difference. There is no forex difference. This is your trial balance conversion. That is, in this case, you should have divided by because it is conversion of Indian currency into US currency or dollars. Okay, INR to dollars. So you should have 3 lakh divided by 55. Like that you should have worked out so that you will not get any forex difference. You will not get any forex difference. Anybody stuck at the trial balance level, please let me know. So I hope all of us understand that there is no forex difference. And then our net profit, our net loss, the question says it is a net loss of 13,778.68. The question says it is a net loss of 13,778.68. 778.68. Even there is a gross loss. And the balance sheet total 25,066.67. 25,066.67. Confirm me whether you are getting these. Yeah. Others? Yeah, it is. Yeah, yeah. We have to multiply. But otherwise, you will do it in thousands, right? When you convert it into US dollars, from dollars to Indian currency, 1,000 is okay. From Indian currency to dollars, 1,000 makes a lot of difference. I hope we are through. Anybody still doing? Please let me know. Are we through, friends? Raja, are you through? Shall I move on? Friends, I'm going to the last question of the day. I'm going to the last question of the day and hopefully the chapter. Question number 14. I am keeping, this is not a foreign branch. I kept this question purposefully. This is May 2020, your attempt RTP. Okay. On 31st March 2019, Chennai branch submits the following trial balance to its head office at Lucknow. So it is a trial balance. So it's a independent branch. Okay, it's a local. It's not a foreign branch. It's an independent branch. Furniture and equipment, depreciation on furniture. Okay, salaries, rent, advertising, telephone postage and stationery, sundry expenses, opening stock, goods received from head office, debtors, cash at bank and hand, carriage inward, credit balances, outstanding expenses, goods returned to head office, sales head office. Additional information. Stock as on 31st March, closing stock 62 lakhs. On 29th March, the head office dispatched goods costing 10 lakhs to its branch. Branch did not receive these goods before 1st of April. Hence, the figures of goods received from head office does not include these things. You also, the head office has charged the branch 1 lakh for centralized services for which the branch is yet to pass entry. You are required to pass the journal entry in the books of the branch to make necessary adjustment and prepare the final accounts of the branch, including the balance sheet. Including the balance sheet. Okay, let's quickly complete this. Go ahead, Raja. Okay, Ramji. Okay, sure. Sorry for taking a very longer time than expected. I thought that Bombay question little elaborately we did. Anyhow, if we are unable to catch up at the end, I will tell you about the next classes through the messages. Yeah. 100%, 100%, 100%. Please do that. Please do that. Yeah. Yeah. Hence, journal entries is the first part of the question. Journal entries is the first part of the question that we are supposed to do. Journal entries in branch account. Okay, it is in the branch. Branch make the journal entries. Particulars, debit, credit. Okay, branch is the one which is making the journal entry. The question says that goods in transit. Okay, head office has dispatched 10 lakhs. The question itself is in lakhs, so let's also do it in lakhs. Okay, let's also do it in lakhs. Okay, in lakhs. Okay, goods in transit account debit to head office. Goods in transit account debit to head office 10. Okay, and the next entry is head office has given centralized expenses. Okay, the question also, head office has charged the branch for expenses 1 lakh. Branch has not yet passed the entry. Okay, centralized expenses account debit 1 lakh to head office 1 lakh. Okay, these two are the journal entries. The question asks for, you are required to pass the adjustment entries and then prepare the final accounts along with the balance sheet. Let us go ahead and prepare the final accounts. Okay, trading profit and loss account of the branch for the year ending. Okay, 31st March 2019. Opening stock. The question says opening stock as 60. Goods received from HO. My dear friends, in the inner column, I have to put 288 because there is a goods return. Less goods returned. Less goods returned. Okay, 5. Okay, so 288 minus 5. Okay, 283. Sales is 360. Sales is 360, my dear friends. sales is 360 and closing stock is 62. Closing stock is 62, my dear friends. Closing stock is 62. Do I have any of the wages or other expenses? Carriage inwards 7. Carriage inwards is 7. Do I have any other furniture, depreciation, salaries, rent, advertising, telephone, sundry expenses? Okay, so nothing of, okay, I can go for gross profit. Gross profit 72. Gross profit 72. 72 gross profit. First, I'll check the credit, outstanding expenses, goods returned, sales, head office. So nothing here. Okay. Now I come to the debit, depreciation 2. Everything has been there in the trial balance means they have charged. If it is there in the trial balance, they have charged. Similarly, outstanding expenses, they have passed the entries. Salaries 25, rent 10. Advertising 6, telephone postage stationery 3, telephone postage and stationery 3. Okay, sundry office expenses 1, sundry office expenses 1, stock. Okay, goods received is taken care, debtors, cash at bank, carriage inwards. Okay, then is there any adjustment? Yeah, head show expenses, head show central expenses. We passed an entry for that 1. We passed an entry for that 1. So we will get net profit. So I'm getting 24. I'm getting 24 as net profit. I hope the class is also getting the same thing. 24, I'm getting it as net profit. Balance sheet as on 31st March 2019. Liabilities, assets. Okay, head office 80, head office 80. Okay, and net profit 24, and net profit 24. Okay, 104, 104. Then, sorry, head office is not 80. I'm sorry. Okay, head office is 80 plus I have passed 2 entries, 10 plus 1. Remember, I have credited head office by 10 and 1. Okay, so head office will be 115. Head office will be 115. Okay, sales is over. Outstanding expenses is 3. Outstanding expenses 3. Okay, now going to the asset side, furniture equipment, I already told you depreciation is already charged. Okay, because it's part of trial balance, which means it is already charged. Okay, okay, salaries, rent, advertising, telephone, sundry expenses, stock, goods received from HO, debtors 20. Debtors 20, cash in hand and bank, cash in hand and bank 8, carry, sorry, closing stock 62, closing stock 62, stock in transit we all know is 10, stock in transit is 10. So friends, as far as branch is concerned, I want you to work question number 9, one of the assignments, and I have given a set of assignment questions, some 6 questions. 6 plus 1, 7 questions. You will take 3 hours to maximum 3.5 hours. Please take some rest. After rest, please start working on the assignment. Try to complete it today so that by the end of the day, you are sure that your branch accounts is over. You are 200% sure that your branch accounts is over, so that your focus will shift to other areas. Okay, with single entry and branch account going into a confidence level, we are very much through with our accounts to a larger extent. Don't worry, other chapters will follow. Just give me a minute.